How's it going, everybody? Welcome to TrendSpider Live. My name is Mike, and today we're going live for the FOMC and tons of big earnings, including Tesla, Microsoft, and Meta after the bell. And today I am joined with the CEO and founder of MenthorQ, Fabio. How's it going today, Fabio? How's your day going so far?
Hi, it's great. Thank you for having me, and always great to be live with you guys. And thank you, Mike, for organizing this. Today is very exciting for sure.
Yep.
The market has been waiting for this event, so we're not seeing a lot of price action, but I think it's gonna come very very soon. Especially also after the bell, we have like really good earnings, so very excited about that.
Yeah, no, it's going to be probably one of the most crazy days of the market by far this year and maybe of the entire year. So if you guys are out there in the chat with us, go ahead and say hi. Tell us where you guys are tuning in from and tell us what you guys are watching today. Right now, well, in just about 1 minute, we're going to get the FOMC rate decision. At the bottom of my chart right here, I do have our polymarket indicator on the TrendSpider platform. And as everybody already pretty much knows, or if you didn't know already, there's basically a 99.5% chance that they are not going to change the rates. They're not going to cut them. They're not going to raise them. But we're going to get that final decision here in less than a single minute. So if you guys are excited for that, let us know down in the chat below. We're going to be watching SPY's price action as we get the drop. We should get some movements. And then Powell is going to come on. Jerome Powell is going to come on in about 30 minutes and, have his press conference and answer some questions regarding the rates. And there is the decision. It looks like, 3.75. It came in as expected. No change. So what are your thoughts on that, Fabio? You have any opinions on rates or the FOMC presser today? Is it going to be good for the market? The SPY's been doing really good lately. I mean, today, as you can see, if we just pull up the daily chart really quick, we did hit all-time highs again today on the SPY. So I'm curious if you have any opinions, going forward for the year.
Yeah. So I think, definitely the words of Powell are going to be very interesting. We know that I think the market was expecting this. So if we look at also the majority of like the economists, like we were expecting a 3.5 or 3.75, so nothing changed, but they weren't expecting a rate cut more than 25 basis point. We didn't see anything coming, so that was as expected. So the market kind of reacted to that. I think the most important is that we crossed that 7,000 level this morning again, so we are back where we were a few weeks ago, which I think is important. And I think most important for us is to monitor the tech earnings that are going to start after the bell. So that's going to be very, very important. We've already seen some movement in the option market on some of those names that are kind of interesting. But the earnings is really flip of a coin. Anything could happen. Even if the market expects good earnings, something could happen that the stock will move in the other direction. So really, it's very hard to forecast, but you can kind of understand what the market is thinking by looking at the positioning and the option flow.
Yeah, no, we should definitely dive into that because, we got massive tech earnings today. Tesla, Microsoft, and Meta, as I said earlier. And on this news, it seems we're seeing Tesla starting to sell off intraday. It's been pretty choppy overall. The market started pretty good this morning. And then ever since, I guess people are just sitting back waiting for this rate decision. Microsoft been pretty choppy as well. And also kind of same story with Meta. So if you want, I can throw your screen up there and you can kind of break down what the option position is telling us.
Yeah, absolutely. So I think I will start from Meta because it's definitely an interesting one. Meta kind of went all the way down at the end of last year and then came kind of back. So we are back in this 670 level, right? Which is very, very important. But, if you remember that the market, like the stock dropped quite significantly. What we want to look for is understanding this really big core resistance level of 700. So we've seen, you see this large histogram here. it's a really big kind of like level on the upside move. So at the 700, so the market is looking at this area. This is where we are seeing the most positive gamma positioning at this 700 level. And then what's really interesting is if you look at our Q score, I don't know how familiar you are, but basically we're trying to understand from the option data, from momentum, from seasonality, from volatility, what can the price action tell us and what can we expect? So we're sitting at a Q score of 5, which is a very, very bullish score. When we look at the option market, we are neutral in momentum. We're seeing a very positive seasonality score, and we're very high on volatility, of course, because the market is reacting to the earnings, right? But the very important part is to look at the change in the option score. So until like last week or a few days ago, we were in a very, very bearish option environment for Meta, and suddenly things started to shift. And this big move from 4 or 5 days ago went from a 0 score, very bearish, to a 4, right? And this was kind of like predictive of this kind of like trend move that we've seen in the past 3 days, right? So even if you kind of missed the first move, you could have benefited from the second, third, and now we're going to see what's going on today. So basically, we look at a lot of that stuff to understand, okay, what is changing in terms of positioning, and we can do the same with the other stocks. So we've seen like a very interesting data coming from Meta and Microsoft, and Tesla has been kind of steady. So we can go over that as well if you want.
Yeah, no, absolutely. Real quick, I wanted to show my chart of Meta real quick and see how those gamma levels are lining up so people can see on the chart, but very useful stuff there. As you guys can see, I have the MenthorQ gamma levels indicator. By the way, the link is down below if you guys want to check out these custom indicators on the TrendSpider platform. But anyways, we see this clear, 700 level right here, and it's basically this pivot level as well right here. It's lining up with a lot of price action, a lot of reactions against that level. So it'll definitely be a key level here. And like you were saying, there's been lots of bullish activity on Meta ever since. It looks like actually the put support level down here is like almost timed the bottom really well right there. And so I asked Sidekick, our AI chatbot, to plot the most recent news, because I believe there was some news that, also caused this stuff. Let me double check right here. So it's saying that a $6 billion Corning partnership, and then is the Threads monetization rollout. So they came out with allowing advertisers to advertise on Threads, I believe, is what was kind of the start of this kind of rally right here. And we had Sidekick plot all that stuff on the chart right here, all the news labels right there. And so, yeah, it would be really nice, to see 700 on Meta. It would be a really good sign for the overall market. But I am curious to see what you got for Tesla as well now.
Yeah. So if we open up Tesla, so Tesla kind of like it's sorry for that.
No worries. I'll put up my screen in the meantime. Here's the Tesla 5-minute chart for you guys. Been reacting to this put support 0 DTE level. Let me know when you're back up, Fabio.
Yeah, I was logged out. No problem.
No worries. But let's see. Let's pull up the daily here on Tesla as well. Again, it's been chopping kind of in this range. You can see our social team had this channel drawn as well. This is interesting. It's trading at the lower end of this channel ever since this massive breakout caused by Elon's buying back in September. The stock has, kind of gone up and really chopped a lot. They had a kind of a fake breakout up here and came back down. So yeah, it'll be a big earnings report for sure in terms of price action. At least it's trading right near their recent highs there. So let's see. I'll throw you back up.
Yeah, so what's interesting in Tesla is that so we are kind of in a neutral situation. So our momentum is quite low. As you've seen, we are kind of in a sideways trend there. We're seeing a slightly positive seasonality, but the option has been kind of neutral. And if we go and see at basically the change in the score, we've been kind of like at these 3 levels for the past kind of like few weeks or over a month almost. So nothing is really giving us a clear picture on coming from kind of the option chain on Tesla. So we can see that we have this, obviously, this big 500 level, and obviously 400 is our put support area right here. And then, of course, we have this 500 big wall that we see where, like people are looking as a target, but we also have a lot of like positive gamma here. And the reason why it's also choppy is because we have a lot of like positioning that can kind of cause like the price to pin a certain levels. So that's why we also haven't seen a great price action on Tesla recently, but things could change during the earnings later today.
Yeah. Now, even during potentially during the FOMC as well, we might get some volatility that'll affect all these names going into the close. And I'll put up my chart again real quick of Tesla with the MenthorQ gamma levels indicator. We are seeing on the intraday charts here a one-day max at around, well, like 452, 453-ish to like 409. So that's a pretty big move, potential move. 10% expected move going into this earnings announcement. So we'll see. We'll see what we get with Tesla. And again, we still have a lot of time until earnings come out. First, we got to, see what Powell has to say, see if he affects the market at all. Monte Cristo, we did just cover Meta as well, if you want to rewind the video a little bit. And we just covered Tesla. And then the next big name today is, of course, Microsoft. Pull this up on the daily chart right now. Kind of similar to Meta's movement, is selling off pretty hard for, quite a while. I mean, I had a clear double top right here, right around the 550-ish level. And it sank all the way down to like 440. And just like Meta, we had, like about 4 strong daily candles up back into this consolidation range. So if you want to cover Meta as well, Fabio, probably be interested to hear what the options is telling us.
Yeah, so if we go Microsoft, we see a very similar picture to Meta. So we see a very high option score, very high seasonality, obviously very high volatility. We are also sitting at a 50% IV rank. So that means that we are starting to shift into a very high volatility environment. So for those who are kind of trading options, that can become a very interesting environment because you're going to get a lot of premium for where volatility is. So I think today we're going to see maybe like a really nice movement there. If we look at the option score, we are seeing a very similar picture. So we've been kind of like in a very kind of a downtrendish environment until a few days ago, so 4 or 5 days ago, and then we suddenly see the spike in the kind of option score that went from very bearish to neutral, and now we are sitting at the top. So over the last 3 days, we've seen this really massive move up. So that's an interesting move that we see. Again, doesn't mean that the price is going to just skyrocket at the end of the day. It's all based on earnings and all based on data that we cannot predict, but we can understand what the market is doing, reacting before earnings. We can also go and look at the intraday flows. So if we look at our intraday and we open Microsoft here, we can see how those levels are changing. And if we go here, we have this target price of, again, 500, massive core resistance area here, and then 450 becomes our kind of like support coming from the negative gamma environment there. So
yeah, no, it makes sense. And I know I use your guys' indicator a lot for these earnings streams because it's pretty useful seeing what the expected moves are and all that stuff going into earnings. And I think we had a question one of these live streams. Someone was asking how these tools can be used to, set up like strangles or straddles for earnings. I was curious on your take on that. Would you use like the 1-day min and 1-day max levels, or would you not use them to pick strikes at all? Or what do you think?
Yeah, so I think if you go back to my screen and we can go back to Meta, right? So typically we can use definitely the 1-day max, 1-day min move as an indication of where the price can move. But again, earnings are very volatile, so anything could happen. So you might want to look at previous earnings and understand what's the typical move for Meta during earnings, because maybe you're looking at a 3 or 5% move, but maybe during earning we're moving 10% because of the data that comes out. But definitely you can use those levels for strikes, right? So you can use, so obviously a lot of people ask me, like, what does a core resistance at 700 mean? So clearly it's going to be a big wall to break, because we're going to see a lot of positioning here, and it's going to be hard to break through this level. But if we break through this level, then we might see what becomes an inflection point, because a lot of the players that were exposed at this level, they might either keep those position on, or they might roll their strike to a higher level. Right. So that means the market makers are going to be forced to hedge harder or with more volume, and that can push the price much higher if that happens, right? So when we break through this core resistance, or when we break through this put support, then we kind of see like this inflection point going through. So you can definitely use those primary levels for your strike selection, but very important, you also want to look at the volatility measure, right? So whenever you sell options above certain levels, if you're doing like iron condors, right, or short strangle, short straddle, you want to sell when volatility is kind of high, right? So you don't want to sell when volatility is low. So you can use this this volatility measure to understand how we are placed in volatility. And then another very important point, which is this one, which is what we call volatility risk premium. Volatility risk premium is essentially the difference between implied volatility and historical volatility, and this tells you historically if the difference is high or low, right? So when we look at these two numbers, is 40 a good implied volatility number versus a 26? But the importance is not really looking at this number today, but it's looking how they have performed historically.
Interesting.
So understanding that we are in an overvalued IV environment can also help you define whether your selling strategy is better than buying strategy.
Yeah, that makes sense. Of course, you definitely want to sell when the IV is high. Does that tend to always happen during earnings, or is there some earnings where there isn't that big VRP, volatility risk premium?
So normally, like we see the concept of IV rush before earnings. So typically it's what you see here, where implied volatility tends to rise towards earnings. And then we have another concept of IV crash. So like normally after earnings, volatility tends to stabilize. So that's why it's, for a lot of traders, it's a very good opportunity, because even if the price doesn't move, you're going to benefit from the crash of volatility. And I think a very good example was Netflix. Last week, I believe, we were covering this. There was a very big IV rush towards earnings, and then volatility kind of went down. So volatility on Netflix went from, we can go over here, went from a 45 implied volatility to now around 30. So in a matter of a day, we dropped about 15% on implied volatility. So even if the price doesn't move or stays in a range, you're going to benefit from this crash of volatility.
Yeah, no, absolutely. But the key is that the stock doesn't move past your strikes too, right? Like you'll benefit from the IV crush, but you also don't want the stock, like, if you sold puts, to absolutely just like tank through your strike, right?
Yeah. But the good thing is that even if the stock rise a little bit below your strike, you could still make money on the volatility crash and on the time decay, right? So that's important. But at the same time, yes, you don't want the price to go past your strikes if you're selling option, and of course you want that if you're buying option in your direction.
Yeah, especially if you have, those close stated expirations, a week or even just a couple days or a day. If your stock opens and it's in between your strikes after earnings, there's a very good chance you're going to close it out for at least some profit, thanks to the volatility crush.
I think one other important topic is that we're going to start seeing daily options on Max 7 very soon. So zero DTs option on Max 7, on IBIT, on some of the bigger name. So that's gonna also have a bigger impact because we're gonna see more option volume coming in. So we're gonna see better, maybe like more interesting price action derived from option activity.
Yeah, probably a lot more intraday volatility coming,
Yeah.
right?
Yeah.
Yeah, absolutely. Absolutely. I was curious, everyone's been talking about gold and silver. Curious if you have any comments on the insane rise that we have seen here on, SLV or silver futures, whatever you're trading or looking at. I mean, just absolutely insane run. Obviously, there's a breakout down here and it's up. Stock has, or SLV or silver, has more than doubled in just a few months, which is, insane. Like, I'm just curious if you have any opinions on that. A lot of people are attributing it to like the dollar risk. But I'm just curious if you have any take on that.
I mean, what's happening is like, the euro dollar exchange rate has completely shifted. So that's definitely an important one. Obviously, what's happening in the macro environment. But I think what's interesting, and I don't know if you have it on your platform, if you look at the volatility of silver, which is VX SLV, I don't know if you guys have it.
I don't think so.
Okay, so basically, if you guys have that chart, basically we are at the level of 2021. So we haven't seen this level of volatility on silver since 2021, and before that it was during COVID, right? So
wow,
the volatility of silver is at all-time high. This has not happened since 2021, the previous time. Then before that it was COVID. So clearly two big catalyst events. Like I think 2021, I don't remember what was the macro catalyst at that time, but definitely. So what's that got to do for retail investor? There's definitely a lot of opportunity, but at the same time, when you see a chart like this, it's a lot of risk too.
Yeah, no, absolutely. Yeah, I think I'm trying to think back. Also, 2020, what the catalyst was there. I think 2021 might have just been, that's when I think. Well, in 2022 is like obviously the bear market.
Yeah.
And it was a lot of inflation talk. So I'm thinking maybe 2021 was just a pre-move to all the inflation stuff, because there was inflation talks probably, before
sure.
2022, after all them, the QE that the Fed did in 2020. So that would probably make sense. But yeah, crazy moves going on. And silver, it looks like silver is relatively flat today, or it's been moving crazy intraday, but overall, it's just up slightly since yesterday's close. Still green. Gold is up over 2%. Another gap up on gold today, which is honestly insane. And then semiconductors. Look at the SMH ETF. This one did also made a gap up. So, we're seeing some pretty positive movement also in the XLK tech ETF. Lots of positive movement.
Yeah, and
Bitcoin,
if you want to pull up my screen, I just have
yeah.
SLV in front of that. It's kind of interesting. So if we look at volatility, we are sitting on 102% of implied volatility versus a 66% of historical volatility. And if we look at our VRP chart, we are basically at the highest we have been over the past 3 months, and at the same time over the past year. So clearly, like what this is telling us, like if you're an option trader, then this would be a perfect environment for selling option. But at the same time, with volatility so high, it's also very risky, because you could really, like, if you missed up the direction, you could really be in trouble.
Yeah.
Definitely, like, when we see situations like this becomes great opportunities.
Great opportunities. So yeah, I mean, like you said, very risky. I mean, a lot of people are doing the same, or like kind of the same concept with like the GME run. It's just absolutely skyrocketing every day. And if he sold calls too soon, you could have got absolutely obliterated at the same time. But also, you could have made a lot of money just based on the volatility alone. So
yeah, and going back to that point, I don't know if you remember the GME. Like, even when we look at the chart that you had, it's exactly the same chart. The problem that during the GME kind of rush, a lot of people lost money on calls because they were buying at a too high volatility. So they were buying calls when volatility was at the maximum. So even if the price continued to go up, the volatility kind of crashed down. So they were still in red on those times. So that was a very interesting one, because the price was keep going up, but you would lose money on the calls because volatility would go down.
Yeah, no, absolutely. Crazy times. And yeah, I don't think many people, there's some people, I think most people predicted that probably, like Bitcoin and Ethereum would be the thing, moving like silver and gold right now. But we're seeing, that almost the opposite happen. Do you have any opinions on crypto at these levels? Like Bitcoin?
Yeah, I think, I mean, the issue with crypto is that it's a risky asset, right? So every time we have uncertainty in the market, crypto tends to not perform very well because it's the first asset that institutions or big player would sell. So whenever we see like, we are in a world where now every macro event is very important. So we have Venezuela, we have the issues with Iran, we have a lot of like things happening in the world that can affect the way people are positioning, and crypto doesn't really benefit from situation like this because volatility can skyrocket very fast. So I think the issue with crypto is not that we are in a downtrend, but it's more like being a risky asset. It fluctuates with the volatility of the market, right?
Yeah, and to be fair, like to crypto, I mean, it's held up really good. I mean, it obviously came down, under 90,000, under 100,000 since it topped out. I'll put my chart. Are you pulling something up? Yeah, but it's held up pretty nice. I mean, it's been consolidating for several months now between like this in like the $80,000 to $90,000 range. So even with everything going on, it hasn't shown much downside risk yet, at least.
Yeah, if we look at our models on crypto, we're still on a kind of bearish side. So
Okay.
Here what we have is the direction and the sentiment. So the sentiment, it's more like at the macro level. So when we see we are in a bearish environment, means that at the macro level, this is not favorable for crypto and everything that is going on in the world. The rate situation, even though we are at all-time high on the stock market, we're still seeing a lot of uncertainty coming from the macro environment. And then the direction is really a model that tells us whether we are in a bullish or bearish direction. And if we look at Bitcoin, for example, also the option market is kind of like on the bearish side. So this is a score for the option market, and here we can see kind of like the direction right here. So it's kind of like trying to understand, okay, where is the market going to go? And we have really nice kind of like signals at the beginning of the downtrend, and now we're kind of in a sideways for the past, like you said.
Yeah, definitely the type of market that'll chop up like trend and momentum systems. But once we get a breakout to either direction, it should be pretty good, I think, for traders.
Yeah, I mean, I think when you trade assets like crypto, there's a lot of opportunities. You just have to be well aware of the risk, especially if things happen at the macro level, right? So everything is correlated together. So understanding this correlation can be very important, right?
Yeah, no, 100%. 100%. Cool. Yeah, so that was great. And for everyone out there watching, we do have Powell coming on to speak in just about 4 minutes. Fabio, I know you're going to head off before then, but yeah, if you just have any like last final words or anything that you're watching in this market, if you have any trades or plays that you're thinking of, it could be individual stocks or just an overall macro thesis before you head out, would love to hear it.
I mean, we are watching closely what's happening more on the macro side. The dollar is very important, understanding all the things happening with Europe. We are looking at Europe as an interesting kind of area, which is kind of underpriced still, I think, and there's could be opportunities there. We definitely have a lot of positions in gold and silver, so that's more on kind of like the longer term portfolio, right? For us, those assets are kind of part of an asset allocation, so we are clearly enjoying the move that we've seen in the past few months that help us kind of balance out the risk that we take on kind of longer term position. And then we are monitoring a lot the AI trend and basically what's happening with the Big Mac 7. So what's going to happen with Meta, Microsoft, Google, what's happening with OpenAI currently, like versus Anthropic. Those are teams that we follow quite a bit, also because we're investing a lot in the AI space for our product too.
Yeah.
And then basically, Tesla's definitely one that we monitor all the time, definitely part of our wish list. So today is going to be very, very interesting. So those are kind of like the areas. The type of strategy that we do are, personally, like I don't day trade. I mostly do like swing trades and longer term positions. So I would play a lot in the option market with different strategies, mostly selling premiums on selling spreads, all of that stuff.
Nice.
And then, of course, taking position whenever there's a good opportunity.
Yeah, absolutely. You did mention, like the Europe markets. Emerging markets like the EEM ETF has been starting to break out. And so that's a good one. That's a good call out. Something that everybody, I think, should be paying attention to right now is, emerging markets. You can just track, the overall emerging market ETF with EEM. And there's also, like specific ETFs for different countries and whatnot. You mentioned Europe specifically, right? Or did you say emerging? Yeah.
Yeah, Europe. I mean, for example, I was watching the Italian index. I'm from Italy, and kind of was outperforming all the other markets, which is kind of interesting.
It is.
Yeah, but yes, I mean, there are also like more ETFs that take on just the all Europe. I think, what was the ticker? So those are general, like more investing in all those countries, because of course you don't want to take the full risk of a specific country. You want to just diversify that. But they have outperformed kind of like even the US market. So
yeah. So if you guys are out there in the chat and you're only in US equities, definitely do some research into, not alternative assets, but, assets from other countries and whatnot, because they are starting to show some strength. So great call out there. But real quick, I'm going to put Powell on. So let me load Powell up right here. He just got onto the stage, everybody. Mr. Powell is right here, about to give his speech. So I'm going to mute myself in a second here. Fabio, are you going to stick around, or are you going to head off for the Powell speech?
Yeah, I'm going to head off, but thank you very much for having me, and look forward to be with you guys again very soon.
Excellent. Yeah, thank you so much for coming on. We'll talk to you soon. All right. Bye-bye. One second here, guys. I am going to get Powell's speech audio going.
Policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Well, there was Powell's speech, everybody. The SPY has had some pretty choppy movement so far. You can see on the 1-minute chart over here. Here's the Q&A.
I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in, which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today on, I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to, this is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today, that either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. Not something I'm. There's a time and place for these questions, and
I guess nobody cares about the economy today. Y'all can hear this, right? Just double checking.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
I mean, what's your view on the market movements? I mean, what do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market and the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data and the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy is significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. You know, it's in the eye of the beholder, and of course, no one knows with any precision. Is that, you got to follow up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, you know, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira.
Thank you, Chair Powell. Mara Mokwe from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have a 2-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the mandate as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate. That the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted, and I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think that the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments too on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now. Anybody's base case that the next move will be a rate hike. But ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But, right now we're running a very large deficit at essentially full employment. And so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with. And that, in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not what Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer term rates means less accommodative financial conditions. But remember, many, many things move longer term rates. It's not mostly what happens on the short end. There can be effects of longer term rates from our moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, it's, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important. And the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Thanks. Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, a year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? but it shows it's a survey showing that workers feel like job availability it's a very low reading. It's just one reading, but it's an indication of softening. People part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll jobs softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook or strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially the economy has once again surprised us with its strength, not for the first time. And consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good. And we're benefiting from the AI build out of data centers. That's another thing we're benefiting from. But the economy overall, growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple of things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands and they're buying less and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control and, frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs? And how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time, is rising productivity. So we always ask, well, this is going to be different. Is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Beyi.
Thank you, Chair Powell. Beyi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December. And that's pretty much what we had the year before. So on net, no progress. But the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs. And ultimately, we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period. And you can see for that tariff, how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that. And our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But, we'll be able to see whether things are moving in that direction. I think, we'll be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is, a lot of it is around energy, oil. And so far we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate. And in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but you know, it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but you know, there's growth and there's how fast the potential is growing, and at a time of you know, high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output. And it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. You know, GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. You know, it was more in the mid-2s for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when
market's starting to like this.
Labor market get into an argument, in the end, the labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is, you know, stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Another is that, you know, our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, you know, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made it's, you know, that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Hi, Nicole Goodkind-Barons. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, you know, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model. And we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution like happened in the 90s here and like maybe happening now with AI, we're all over that. And, everyone studies those periods and, we're very clear-eyed about the possibility that this higher productivity may persist and also that it may not. We're not, no one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models. I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time?
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything. And so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data. And our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay. Thank you very much.
All right. Well, I think that concludes Mr. Pavel's speech. Let's close him up real quick. So if you guys are out there still hanging out with us, what do you guys think? Don't go anywhere, by the way, because we're about to have Tesla earnings here in less than an hour. But curious to hear your guys' thoughts on everything that was said. as you can see, I drew here where Powell started speaking. It was really right around, I don't know, I guess 695 on SPY, we'll call it. A lot of volatility. So we did end up, maybe 78 cents higher from his speech and all that stuff. So let's see. Yeah, very choppy market today, you guys, on the S&P 500 at least. Let's take a look at some other assets. Silver, it's up today overall, of course, up 2.5%. Gold is up 3%. So nothing he said really changed a whole lot about the market dynamic today. We got bonds, everything's like, I feel like relatively flat, other than like the metals, and then semiconductors had this nice gap up today, and tech is doing pretty good as well. Let's pull up Tesla, of course. See what Tesla is doing. Yeah, pretty flat on the day. But you guys, I just wrote down almost everything that Mr. Powell said, Jerome Powell, during his speech, and I'm going to go ahead and use Sidekick AI to analyze it all for us. You guys are just tuning in for this, welcome to TrendSpider Live. We just watched Jerome Powell give his speech, and the FOMC decided to not cut the rates. They kept them exactly the same, which was as expected. And make sure you guys like and subscribe, because we're about to do some pretty cool analysis of everything that Powell just had to say. So if you guys didn't know, TrendSpider Sidekick AI is our built-in AI trading agent. And I just put in every single thing that Jerome Powell said into this prompt. I'm going to send it in right now and see what it says. See, it's a very, very large prompt. And let's see what Sidekick has to say for us. I basically put in everything he said and then asked it for trade ideas and to break down all the sectors like the metals, equities, and everything based on what Powell said. And so hopefully Sidekick can give us some cool trading ideas based on everything he said. So here is the key takeaways. The Fed is in wait and see mode. They're holding at 3.75. We already know that. So here's the first asset class analysis, which is equities, and it is saying hold. The reason why is because there is solid economic growth and no near-term cuts. Supportive but not euphoric. That's interesting. Tariff inflation peaking mid-year is a relief for margins. Mr. Powell, I keep calling Mr. Powell. Jerome Powell did say that tariff inflation would probably peak mid-year, which is, of course, in about 5 months. And he said labor market softening is a yellow flag, not red. And also gave us some scan prompts right here. So we're going to run a couple of these in just a second, but we are basically, this one is saying scan for large cap tech stocks with strong productivity gains and pricing power, which is something they're recommending. And then it's also saying look for stocks in the Russell 2000 that recently broke above their 200-day MA with improving relative strength, which is interesting. So maybe we'll scan through the Russell 2000. Crypto. So again, asset for equities, or the what Sidekick said to do on equities is hold, and then crypto is hold to buy, which is very interesting. It says no rate cuts equals less liquidity injection, but also no tightening. And it's basically saying the same stuff. If tariff inflation peaks mid-year, crypto could catch a bid as a hedge narrative fades and risk on returns. This is interesting. Emerging markets hold to sell. Emerging markets are recently breaking out, you guys. If you pull up EEM, I was talking about this earlier with Fabio. They're looking pretty crazy, honestly, on the daily chart there, as you can see. But it says higher for longer U.S. rates equals strong dollar pressure. Tariff concerns equals trade headwinds for export-dependent EMs. Let's see. Gold and silver is a buy. It's saying gold and silver is a buy. Didn't tell it to look at the technicals of this stuff at all. This is really just based on what Powell said, so keep that in mind. But, we all know that silver and gold have been absolutely flying lately. Powell explicitly said he doesn't take much of a macro message from the rise in price for gold. But it's saying this is dismissive, but gold is already rising. This is a pretty interesting quote from Powell today. He doesn't take much of a macro message from the rise in price for gold. And Sidekick is saying the reason to buy gold and silver is that real rates may stay low if inflation stays elevated while the Fed holds rates. And then also, again, tariff inflation peaking mid-year, but uncertainty remains, would equal a haven demand. And so this pulled up a couple of ideas. It says scan for gold miners, GDX holdings, breaking out with RSI above 50 and relative volume above 1.5. That is an interesting one. We can take a look at some gold miners. Or it says look for silver futures or SLV breaking key resistance. That is hilarious. If you just look at the SLV chart, you know that it's basically gapping up every day. So there's not much resistance there. Let's see. And this is like the specific scannable ideas. Find S&P 500 stocks with earnings beats in the last 30 days, trading above their 50-day moving average and showing relative strength versus SPY. But bottom line, Powell is threading the needle, acknowledging inflation risks, which is tariffs till mid-year, while not panicking about the labor market softening. It's saying this is a no landing or soft landing narrative, good for risk assets, being selective, bullish for hard assets as a hedge. The dismissal of gold's rise is ironic given fiscal concerns he himself raised. And your best bets, rotate into quality equities with pricing power, accumulate gold and silver on dips, and stay cautious on broad emerging markets, and treat crypto as a tactical risk on play if equity stays strong, which is interesting. So basically, Psychic is saying this is pretty bullish for both metals. It says you can continue to accumulate gold and silver on dips, which, I mean, it didn't look at the chart, so it might change his opinion if I showed it a chart. But, of course, I mean, this is really timeless information here. Just rotate into quality equities with pricing power. But it is saying to stay cautious on emerging markets, which is interesting because that is kind of the one that is breaking out. Again, I pulled up EEM right here on my charts, and it's having a very nice breakout. I drew this horizontal pivot level right here around 58 on EEM that it recently broke out of. So yeah, this is an interesting move, you guys. Maybe we can even scan through emerging markets using Sidekick to get some trade ideas. But if you guys are out there in the chat just joining in, welcome. Again, the market is open for about another 35 minutes. And soon we'll be going over Tesla, Microsoft, and Meta earnings. So make sure you guys stay tuned and stick around for that. In the meantime, we're going to be analyzing what Jerome Powell has said with Sidekick and trying to find some decent trade ideas here. A lot of the stuff that it's saying, I don't always fully agree with. Obviously, of course, this is a pretty good prompt right here. Find S&P 500 stocks with earnings beats in the last 30 days, trading above, just basic stuff. But I'm trying to think of a different prompt here. We got Gary out in the chat. What is going on, Gary? It says he's saying Sidekick loves MicroStrategy. Rates will have a different look once Powell is out. Which of the 90 companies that are reporting today does Sidekick like the most? Is there 90 companies reporting today? That is absolutely insane. I know there's quite a few, Gary. Maybe I can ask it between Tesla, Microsoft, and Meta. Let's take a look at the charts real quick again. Let's do a quick overview here of Tesla. As you can see, it's in this sort of ascending triangle pattern, trading at the lower end of it. And I think we also had this daily channel drawn. So it's definitely at the lower end of a recent trend line that started in the April low of 2025, almost a year ago. That is actually kind of crazy. Let's see what else. Meta. Have all this news data right here. Remove this stuff. Again, Meta is definitely sitting at an interesting resistance level right here. It's at the top or the bottom of a gap right here. that starts right around 680, basically 681, 680 and 96 cents. So it's going to be pretty tough to beat that level. And then the MenthorQ gamma levels indicator did mark the 700 level as a call resistance. That's going to also be hard to break above. So definitely some resistance above us here in Meta. But, you know, if we do break into this gap, there's a good chance we could fill it up to 741. Yeah. Psychic Gary. STX. I asked it about STX before earnings and after earnings, and I believe it did tell me to buy. How is STX? Woohoo! STX, how is STX doing? Look at this thing. STX going absolutely insane today, up 24%. We were live, what was it, yesterday for their earnings after the market closed. So that beautiful play. Let's take a look at SanDisk. Woof, new high on SanDisk. I absolutely love that. Micron, another new high. It looks like SanDisk is kind of getting outperformed by STX and MU here. How much is SNDK up since open? Or I'll do since close. About 10% on SNDK. I absolutely love that. STX. Let's see here. Yeah, SNDK. Are they reporting today or tomorrow? I forget. I have so many lives. Yeah, they report tomorrow. That should be a fun one. Hopefully they follow suit with STX here. I mean, STX, you guys, up 20%. I absolutely love that. But back to Sidekick right here. I want to think of a scan for both emerging markets and IWM, because it did say it's not very bullish on emerging markets like the EEM. Let's take a look at the holdings. Maybe if we could have EEM, if we have, I'm not sure if we actually have EEM holdings. Yeah, we might not. Emerging. Yeah, we mostly have US equities here on the platform. So let's focus on maybe GDX. Or does it say GDX or GDXJ? Isn't GDXJ the gold miners ETF? Yeah. Let me see if we have the holdings list for this. I'm not seeing it. Let's type gold miner, silver index. Let's take a look at this. This is the gold and silver index, you guys. So this is how you can find stocks and, you know, that are benefiting from the gold and silver rallies. Let's see what we got. I've seen NEM quite a bit. NEM, good one you could trade there. R Gold, RGLD, Royal Gold, that is. FCX I've seen. HL is a gold mining company. This one has actually been coming down. That is interesting there. What else do we got? AU. So yeah, guys, I mean, the miners are definitely an interesting and good play. I guess if you pick the right one, for some reason HL is has been coming down. I guess, you know, so far just buying spot gold or silver, the ETFs has really been the move. Gold is actually doing better than silver today, believe it or not. But yeah, let's take a look at these small caps, because small caps is where retail really can make a lot of money, you guys. Large caps are great for investing and whatnot, but I think one of the coolest recommendations here that Sidekick gave us based on what Powell said was to scan for IWM. This is what it says right here. It says, look for stocks in the Russell 2000 that recently broke above their 200-day moving average with improving relative strength. Instead of doing that, I'm going to say scan for stocks in the Russell that have a relative performance greater than 80, trading above their 200-day moving average, which those are probably really going to end up being the same thing. Let's take a look at IWM real quick. Let's see how it's doing. So IWM is actually down decent bit today. If you look at compare it to SPY, it's kind of following the SPY on the QQQ. But again, you know, gold and silver are leading the charge. Let's see how bonds are doing too. TLT is a little down, but ultimately flat. But what would be some good scans for the IWM? I'm going to ask it, what are some good scan parameters I can use to scan the the IWM/small cap indexes for strong names that could perform well based on what Powell said today. So this is how you can use, Sidekick as your AI trading agent, kind of live in action right here. Because if you guys are just joining in, basically what I did, we were live for Powell's speech. I wrote down a bunch of the stuff that Powell said in there, and I told it to give me some trading ideas and assets that would be potentially benefited from what he said. And then one of the things that it said was to scan in the small cap ETF. And then I asked it, what are the best parameters to scan for in the Russell 2000? And this is what it gave me. So most of these look good. It's saying price above 250-day SMAs, pretty basic stuff. Price made a new 20-day high within the last 5 days. That's interesting. That's like the turtle strategy. Recent earnings beats, relative volume, and RSI between 50 and 70. If you want more aggressive breakout candidates, so it's telling me to scan for breakout candidates. MACD crossovers, volume above 50%, price within 5% of 52-week highs. A lot of this stuff we already really have, a lot of data for, like relative performance. You keep seeing relative strength a lot. You keep seeing price above the 50 and 200 SMAs a lot. And then some fundamental data in there as well. But it's saying to avoid unprofitable growth names. So you want to find stuff with a positive PE ratio greater than 0, of course. So I'm going to say scan for stocks scan for stocks in the Russell 2000 that are above the 200-day and 50-day SMAs, and let's see, relative performance, let's say greater than 80. What else did they get in here? Not going to use any of the volume ones. RSI is taken care of really from, I can do that. Let's say RSI on daily greater than, or let's say RSI greater than 50. And recent earnings beat. So let's see what Sidekick can do for us here. So as you can see, Sidekick is actually opening up my market scanner. And it's finding some stuff here for us. It actually scanned the S&P 100 index. I will change that here in a second, but this is interesting still. Oh, it's actually doing it for us. So Sidekick actually can correct itself, and it generally does pretty good. Let's see if it correctly switched from the S&P 100 to the Russell 2000 without me having to do anything. I absolutely love that. Did find a ton of symbols, 178 symbols found. These are all the symbols right here. We're going to have to break these down a little bit, you guys. It's actually a great scan, though. Here's what it built. It said price close greater than 50 and 200. Relative performance yearly compared to the Russell 2000 is greater than 80. It correctly compared it to the Russell 2000 over the S&P 500. And then we got an earnings surprise percent the last quarter greater than 0. So basically it had a positive earnings beat. And then RSI greater than 50, which is a nice little momentum filter. And here's the top ones. So actually did, perfect. Top 5 picks from Sidekick. Number 1, AEIS. Take a look at AEIS. This one actually has a beautiful looking chart. It just recently on the weekly here broke out of this consolidation range and is trading higher. AEIS, Advanced Energy Industries. So yeah, pretty good look there, you guys, actually. Let's see. Number 2, HUT. HUT. Similar kind of setup here. Somewhat similar. Had almost like a little cup with handle formation on the weekly, sort of. More so on the daily here. You can see the cup here and the handle there. And it actually today is breaking out. That's a nice looking one, actually. If I add the Minervini trend template candles, let's see if this matches Minervini's. Yeah, so you can see if I hide all this stuff for us. All the cyan colored candles do mean that it does have very strong momentum and follows all of Minervini's trend template criteria. So pretty solid breakout there. And you see the volume is declining, and then we'll see how much the volume picks up at end of day. It doesn't look like the volume is super great on that breakout on HUT, but also a pretty good look. Third one, HL, we just took a look at this. This is Hecla Mining. This is one of the ones that Tushar Shandi was talking about when he was on the TrendSpider Live with us about like last week. So yeah, honestly, maybe if you want something to quote unquote buy the dip on in the gold or silver space, HL might be one to keep an eye on because it did just pull back over the last 3 days, you guys. Down 20%. That's actually pretty significant drop there on HL. Number 4, TTMI. I've heard of this one. I saw it recently. It had a beautiful, beautiful breakout. Just right here on this candle, very high volume. TTM technology has been trending incredibly well. And it seems to be setting up another consolidation base right here. So also a great look. And finally, VICR. Wow, I love this one. I do love this one. This is one of my better trades of last year. I'm not in anymore. I wish I was still in. Where did I even get out of this one? Curious now. Am I still in this? Oh, no, I got out. Yeah, there's another entry. So, yeah, good one, though. VICR. So, honestly, incredible work here from Sidekick AI, showing us the top stocks in the IWM based on exactly what Jerome Powell said today. If you guys have any questions about anything I just did, let me know down in the chat below. TTMI is awesome, Gary. I love that. And I appreciate that. Yeah, the moon. Yeah, you just use Sidekick, Gary. It's pretty damn good these days, as you can see. Let's see what else we got here. And it broken down by different sectors as well. These are the semiconductors. And again, we got TTMI, SMTC, Semtech, and AEIS. APLD was a good one. Still is a good one. Along with HUT. Recent breakout just yesterday. And also today, it's holding above that level. CAT is interesting. Yeah, it said, wait, that's not a small cap. That's kind of funny. Let's see. And then LMND and GH, both of these have been on my radar personally as well. Look at LMND, you guys. Well, yeah, let's take a look at, the weekly's pretty good. Recently had this breakout right over here, pulled back. Another consolidation break and another breakout. And yeah, solid revenue growth here on Lemonade. This is insurance. They recently had news with Tesla. I believe it was like anybody that drives a Tesla that has FSD installed or something gets a discount on insurance from Lemonade. I believe that's what the news was. And GH, Guardant Health, is something I'm actually in as well. Again, beautiful revenue growth, and I'd love to see it on the list here. Yeah, check out LMND or Lemonade, Gary. They just recently had news about potentially getting you some cheaper insurance, I believe. The GH also very, very nice look here on the chart. So shout out to Sidekick for all of these trade ideas. Again, if you guys want to check out Sidekick, you can try it out on the TrendSpider platform. It is obviously only on our platform. You can get a trial of the platform for just $19 today if you wanted to. You can use the link down below. Just go to trendspider.com as well. But yeah, definitely take a look at TrendSpider, you guys. I'll drop a link down below. put it in the chat for you guys just right now. I love that, Gary. When earnings? 18 minutes, Robert. We got 18 minutes, maybe a little bit more than that. And by the way, you guys, the thing that Sidekick just did here that to me is so crazy. It took a list. I mean, it made us, for one, I gave it what Pal said, and it gave me some ideas of what I could scan for. And then I had it build me a scan to find stocks. It built a scan for me completely. And then not only that, it actually ranked the top 5 from them automatically for me because, you know, there's tons of symbols in here. I'm not going to sit here and go through all of them when Sidekick exists. It just gave me the top ones by sector and based on, you know, what the scan results were, and then analyzed it using all of, you know, its knowledge and data from the markets that we feed to it. It's a very, very nice workflow right there, you guys. See you later, Gary. I'll see you next week. Absolutely. Yeah, let me know if you guys are out there in the chat. Let me know you guys are in. Someone just mentioned they're in HIMS. Yeah, that was brutal. That is absolutely brutal hold there on HIMS. I can close my market scanner now. I'll close Sidekick now as well. But yeah, HIMS probably just going to come down to 25 at this point, to be honest, you guys. What else are you guys trading? If you guys are just joining in, welcome. Make sure to hit the like button and subscribe as we come here into Tesla earnings. Not just Tesla, Microsoft, and Meta. And while we wait for these earnings to come out, let's prompt Sidekick with some stuff here. One sec. People are asking Palantir. Somebody's in Palantir. It's E from X. Yeah, Palantir has definitely lost some steam, hasn't it, you guys? Let me remove all this stuff here. This here is the weekly chart of Palantir. As you can see, it hasn't really gone anywhere since like July, almost a year. Can you believe that, guys? Like, yeah, it did hit all-time highs back in November, but, you know, recently it technically hasn't made, you know, much progress here in close to a year. When do they have earnings? They have earnings coming up relatively soon. I think it's on Monday. Yeah, it's coming up on Monday. So definitely pay attention on Monday to probably around the 150 level that I'm seeing right here. This is going to definitely be where you're going to want to see it hold if you're long in Palantir. Why do you think that is? I mean, it's just been such a big, it's moved so much over the last however long, like ever since, you know, just 2024, like a year and a half ago or less, like 1 year and 2 months, it's up 285%. It did hit at the top 400%. So I think it's just cooling off. And, you know, of course, the valuation metrics like, you know, PE ratio and stuff is off the charts. So I think it's just breathing, just, you know, cooling down after that massive run. If I were to give an opinion on that. What else? LEU, I've seen this one. Somebody said they're in LEU. This one is pretty nice look right here. This is the weekly chart. Got a key pivot level here at around 246. Let's take a look at the daily because it did make a nice base and break out recently on the weekly there. Let's take a look with Mark Minervini's trend template candles. So relative performance and a lot of other stuff is still under 80. It was, you know, a strong momentum play back here, but recently lost some of its momentum. It's starting to get a little of it back with these dark blue candles, but hasn't flipped to cyan yet. So the momentum isn't incredibly like super strong on this one, but it's pretty good. I think it's definitely something that you could probably continue holding if you're in and wait for it to break under this consolidation area, depending on your strategy. Someone asked about HIMS again. I was saying, you know, around this 25 level would 100% be the area to be watching if you're looking for support on HIMS. Right there, which is around like the 25 to 24-ish level. But yeah, it's going to be tough. I mean, Yeah, it's got some room to go down. It's not something I would want to touch right now. It's about another 17% to go to that support level. So, oh, by the way, here's a stock, you guys, Carvana. I saw this earlier today on some news. Let me grab something real quick, a little prompt. So Carvana stock is down quite a bit today. It hit minus 21% at one point today. So I'm going to use Sidekick AI to find out exactly what is going on. I'm just going to open up Sidekick and throw in this prompt right here, just saying, analyze Carvana's drop today and give me the main catalyst for the drop and summarize the news, because I have no idea what's going on. I'm sure you guys are curious. When a stock drops 20%, you want to take a look and see what's going on. And let's see. Short seller report alleging accounting issues. So Carvana crashed, obviously down 21% intraday. And the primary catalyst for today's collapse is Gotham City's research short report accusing Carvana of undisclosed transactions and accounting issues related to its Bridgecrest subsidiary. So that is the news on Carvana today, you guys. That's the reason why it's trending. And it is down over 20% on the day. We just use Sidekick AI to figure that out in just seconds. If you guys want to try that for yourselves, use the link down below. Go to TrendSpider.com to try this platform for just $19. Very easy to do market analysis here with this. What else are you guys looking for here? Someone asked about silver, SLV. I mean, the only thing I can recommend on SLV is to set up a trailing stop. And yeah, that's pretty much it, you guys. Like, you could have argued for so long now to sell here, to sell there, to sell there, to sell today, to sell this day. If you can do that, you can trim your position. But I think, using a trailing stop, and to do that on TrendSpider, if you want to set a trailing stop on something like SLV to try to help you when to get out, you can just right click on the candle of where you got in and click this trailing stop long anchored and set it up to whatever percentage you want. You can also do a volatility based stop, but you can do like a 20% stop loss trailing stop or 15%. And every single day that this SLV ETF or silver continues to make a new high, this trailing stop loss will move up. That is how they are designed to work. And then ultimately, when the trend quote unquote breaks, you will get out automatically. You can just right click it, create an alert at the line, and then just have TrendSpider let you know when it's starting to break trend. It can send the alert to your phone, to your mobile app, the TrendSpider mobile app, or you can even connect it to Signal Stack to automate the sell from your broker automatically. That is actually what I do personally. Let's see. So a lot of ticker requests. We do have 10 minutes until Tesla earnings, but until then, let's take a look at EEM. This is emerging markets, you guys. Definitely keep an eye on this stuff right here on emerging markets, because they did just have a breakout from its 2021 highs. And we're looking at this right here. I'm going back all the way to the monthly. It is literally making all-time highs, you guys, on this emerging markets ETF. That is something you want to keep an eye on, especially if you want to diversify your portfolio out of U.S. equities. I think EEM and maybe some other, emerging market funds are something that you should look into. If you were to trade this, obviously you can use this pivot level as a key level of where to potentially get out, if it starts to go sideways. So maybe you can set a stop loss before this consolidation range. It really depends on your strategies here, you guys. Like, if you were to get in it, obviously you missed a breakout quite a bit now, but I mean, even from there, it's only like a 14% drop all the way down there. You can even use the position tool. For example, let me remove this. Say you got in today, right now. Drag this over a little bit. You can use your position tool here to base a good risk to reward. Like, say down there, maybe you want to set a 15% stop loss or trailing stop. And then if you want to play like that, you want to shoot for probably a reward to risk of at least 2. You're going to want to see at least, again, like a 30% gain. So some setup like that is something I would be maybe looking for if you want to get some diversification. Yeah, let's take a look at APH. I think I have some APH myself, and they just had earnings, and they declined quite a bit today, but they did reverse ever since based on the earnings. So yeah, let's take a look at the APH earnings. I'm actually curious on this myself too. So let's use Sidekick AI to go ahead and analyze APH's earnings. Or is this, when did this report? It was, yeah, it was today pre-market. Perfect. Thanks, Keith. Said, I am the strongest indicator on TrendSpider. Oh, wait. Oh, yeah. I just said, what do you think is the strongest indicator on TrendSpider right now? I mean, you can't really judge an indicator based on how strong, like, I wouldn't say there's tons of different indicators on TrendSpider for one. There's tons of different styles. There's, momentum indicators. There is mean reversion indicators. It really just depends on the way you trade. If you give me the strategy that you like to trade, I can give you a little bit better of the type of indicators that you should look into for sure. Let's see here. So here's APH, you guys. Let me zoom in for you. EPS came in right here at 97 cents versus 93 cents, destroying the last quarter. They had a double beat. As you can see, revenue beat as well by a decent amount there. And forward guidance was great. 8% above consensus on EPS and 9% above consensus on revenue. So it looks great. It says shares initially fell post earnings despite the beats, then rallied up 7% from intraday. JP Morgan raised its PT. That was before earnings came out. Everything looks great, you guys, to be honest. Rating is a buy from Sidekick. APH delivered exceptional Q4 execution with record margins, beat and raise guidance. I mean, you can't really ask for much more here on APH. Let's see. So yeah, honestly, it had a nice breakout there. This is probably a great place to potentially buy the dip if you're looking to buy the dip on APH. Sidekick gives the green light, so why not? Your stop loss is even lower now probably than if you were to buy, obviously, on this massive breakout right there. That's pretty good. Someone said KTOS had a big drop today. Yeah, right. Kind of similar setup here, you guys. Breakout, pull back to like the pivot level, and it's trading right there right now. It looks kind of shaky on this one to me, not going to lie, but hopefully it goes ahead and holds this this 107 level there for anybody in KTOS. But yeah, let's get back into analyzing the earnings that are coming out in just a second today. Tesla, Meta. See if I combine these all into a single prompt. Yeah, let's not do that. So starting with Tesla. If you guys are out there in the chat and you're just joining in, welcome. The market closes in about 4 minutes, and we're going to be watching the Tesla earnings along with Microsoft and Meta. Here's how the charts look going into earnings for Tesla. Again, still chilling at the lower end of that channel. Meta still chilling right below a lot of key resistance at around 700 and the start of this gap right here that it's really forming somewhat of a triple top right now. So we'll see if we can break out of that. Microsoft, kind of same thing. We're sitting in definitely some resistance in this consolidation area right here. So honestly, yeah, Microsoft and Meta might have a tough time. Hopefully they can provide some really good numbers today and break above these resistance levels, that would be amazing to see. And if they don't break above these on earnings, you guys, it's probably going to be a tough road going forward, not going to lie. Let's see what Psychic is showing us here on Tesla. So these are reported numbers from prior quarters, and these are the estimates for quarter 4 2025. Let's see. These are the last 3 quarters here. So surprise, they actually did miss EPS one of these times. I'm sorry. Yeah, they missed both revenue and EPS in quarter 1 25. Last quarter, they did okay. Last quarter did all right. As you can see right here. But let's see the take overall. Psychic is saying to hold or sell Tesla before earnings, saying the risk to reward is unfavorable. Expectations are for continued year-over-year EPS decline, yet the stock trades out at premium multiples, banking on the FSD and robo-taxi promises. So, yeah, it's going to be an interesting report. We'll see what Elon Musk has to say during the earnings call, absolutely. But yeah, the fundamentals in Tesla are not looking the greatest. If we pull up Tesla on the chart here, while we're doing that, let me reprompt Sidekick for Meta. Oh no, that's the wrong one. Hold on. All right, guys, we got 1 minute until the bell rings. Luckily for us, I am prepared. I have 1 minute charts for 4 of the names reporting today pulled up right here. Microsoft, nice move into close, but now it's dumping. Market just closed. Market just closed, you guys. So that means we're about to see some crazy movement pretty shortly. On my charts, I have Tesla at the top left, LRCX at the bottom right, got Microsoft at the top right, and Meta at the bottom left. Let me double check when these earnings are. Oh, Microsoft absolutely getting demolished right now. Absolutely getting creamed. Holy crap. Well, that's about a 4% move, but still not what you want to see if you're holding Microsoft, is it? Continues to tank. It looks like obviously the Microsoft numbers came out. They were the first ones to report. Meta getting a candle here to the upside to start. Meta looking good. Stick around, you guys. We're just watching the charts for now, but we're going to take a look at all the numbers once all the data is officially out. You know how earnings are, like the numbers can come out, super quick, but then stock price is the real teller of what is happening. That's the only thing that matters at the end of the day for traders, in my opinion. Well, not the only thing. Fundamentals still matter, but price action is where you make the money. So we're going to focus on the price action for the start here, and then we're going to use AI to analyze all the numbers for us and see what is going on. So Microsoft technically should not have reported yet until 5 minutes after the bell. Let me refresh this source right here. Yeah, Robert, it is a very cool software. It is called TrendSpider. You can look us up. Use the link down below in the description. By the way, if you guys are just joining in, make sure to like and subscribe if you guys enjoy this content. And also, you can use the first link down in the YouTube description below to sign up for TrendSpider's free market newsletter. We send you guys trade ideas every single week on Sunday, straight to your email, completely for free. All you have to do is drop your email in the first link in the description down below to get those trade ideas sent right to you. I'll also drop the link in the YouTube chat for you guys. Yeah, some pretty good moves so far. Well, not really. Microsoft is moving down. Good moves as in relatively big moves. Tesla took a nice little dump in the close there, about 1%, but nothing that crazy. How much is Microsoft down so far? We got Microsoft down about 8% in the after hours session. Yeah, that's going to sting a little bit. You guys are just joining in, make sure you guys subscribe because we're going to be going live for the rest of the week as well, even on Friday morning. We have SanDisk earnings tomorrow. That will be a big one. Yeah, Meta is a little bit of a dump here. Nothing too insane yet. We're waiting for the numbers to officially get released, and then we will go ahead and analyze them together. Theoretically, you guys, none of these companies were set to report until 5 after the bell at the earliest. So we're going to still wait and see what happens here. But so far, we're getting some not ideal price movement. LRCX just had a nice candle to the upside, but everything else I'm seeing on my charts is going down. I'll take a look at CLS. Why not? CLS not really moving a whole lot here. Meta starting to inch back up to where it closed. I know I'm probably missing some other stocks here. Let's see. Yeah, CLS, we got NOW and IBM as well. Let's take a look at now. Now, nothing crazy quite yet. And then IBM. IBM, nothing much quite yet. LRCX was moving, though. And it just gave back all of that move. Tesla has fallen through my chart to the downside up here. Probably breaking through that channel right now. The Heckler Fund, what happened? Earnings are being reported. Some of the biggest companies in the world are reporting earnings right now. Haven't looked at the numbers yet. We're just looking at the price movement as the numbers come out. They should be starting to really come out now, but I think probably most of them have come out. Tesla itself was supposed to come out in 2 minutes from now. 07, 7 minutes after the bell. It is 5 minutes after currently. I'm pretty sure Microsoft came out. Yeah. And Meta should also be out. Tesla just gave back or retraced a lot of those red candles just now. It's moving back up. Yeah, now I'll put it at the bottom right corner for you. Hasn't really moved much at all quite yet. Somebody said Microsoft had a double beat. That is cool. I will confirm that here in just a second. But Tesla is actually up in the after-hours session now. It continues to move up. I think the earnings are coming out maybe in a minute, unless they're already out. Never know. Never really know until the price fully moves. Meta also now up in the after-hours session, along with Tesla. Microsoft is getting creamed still. Now is flat. Nothing's going on with now. Oh, Tesla moving up, you guys. Tesla's sitting about 438 right now. Since the close, that looks like about a 1.5% move to the upside. Somebody said Tesla beat on both. Tesla looking good. Let me pull up my other screen here. Refresh my news widget. Yeah, double beat on Tesla. So let's start analyzing some numbers, you guys. For one, let's see what Sidekick has to say about Tesla or Meta. Gave a hold on Meta. That's fine. Let's take a look at Tesla here. While I prompt this, I'll load that up for you guys. Whew, Tesla flying through my chart to the upside. Gotta love it. Now is tanking. Well, down a couple bucks. I have so many charts open, you guys. My computer is going insane. So now we're going to get the actual Tesla numbers here. Thanks to Sidekick. But yeah, we did get a double beat on Tesla, as we can see here in the TrendSpider news feed, right on the right side, right down there. Again, Tesla EPS at 50 cents beat the 45-cent estimate. Sales at 24.9 billion, beating the 24.7 billion estimate. And we're going to get this all visualized and explained to us by Sidekick in just a second. Looks like first generation production lines for Optimus are being installed in anticipation of volume production. That's cool. Here is the Tesla earnings breakdown. This is what was reported. That was what was estimated, and that was what was last year's on the same quarter. So 50 cents EPS versus the 40 cents estimated as a beat. And it looks like here, revenue just barely beat expectations. And it still gives a hold on Tesla for Sidekick. The bull case is, of course, EPSB, FST monetization accelerating with regulatory wins potentially near. That's been the news forever. Robotaxi expansion validates autonomy progress. They are making some pretty good moves there on FSD stuff with the Robotaxi. And then I think this AI and Optimus robot stuff does provide some pretty crazy upside if they do execute that well. So that's Tesla. And Sidekick is saying, it says hold, but it says if guidance disappoints on 2026 deliveries or margins, this becomes a sell. But if FSD and Robotaxi guidance is aggressive, and I'd add probably Optimus production is aggressive with near-term monetization, then it's a buy. So yeah, pretty makes sense to me. Makes sense to me there. Now let's go ahead and do let's do Meta. Minimize this for now. So that was Tesla. I'll pull up the charts again. Meta is ripping. Tesla ripped. NOW ripping as well. So only thing down so far, it looks like, is Microsoft. Meta is at 700. That is a very, very key level here on Meta at 700 per share. See, hopefully it can break over that. That would be nice to see. But this is how Tesla looks with earnings moves baked in on the daily. We'll get there in just a second, the Heckler Fund. But here's the Meta chart. Look at Meta on the daily breaking into, there is a gap from like here to there. So Meta breaking that resistance that I was talking about earlier, which is very crucial on this earnings, in my opinion. Let me see. I have to rerun this Meta prompt. Let's do Microsoft then in a second here. Take a look at, but first let me look at the news feed for Meta. As you can see, Meta sees Q1 sales 53.5 to 56.5. Yeah, so raised forward guidance on the Q1 sales on Meta. EPS beat, sales beat, double beat on Meta, of course. and it's looking pretty good in the close. And then Microsoft. See, Microsoft rejected its resistance I was talking about before the numbers dropped. Microsoft Q2 EPS beats estimate, and then sales beat estimate. So double beat on Microsoft. Don't see anything on forward guidance from Microsoft quite yet. So yeah, double beat. Meta, Microsoft, and Tesla just barely double beat. And they're saying a lot of stuff right now out here on Tesla. Take a look at Microsoft right here. Actual number, of course, again, beat for EPS. Revenue also beat. And let's take a look at the revenue guidance. It says about 14 to 16% growth here in revenue guidance. Microsoft says Azure growth guided at 37% constant currency for Q3. CapEx increasing above fiscal year 25 growth rate due to AI infrastructure build out. So again, that's a big thing is CapEx. Heavy AI spending coming from Microsoft. Definitely pressuring them near term. I think that was the big reason that this double bottom essentially played out there on the double top on the daily chart. Microsoft, why is nothing happening, you ask? Let's take a look at Microsoft chart. I mean, what do you mean nothing's happening? The stock is down quite a bit here. It's down, it was down about 8%. Now it's down about 5%. But it is giving a buy rating on Microsoft Sidekick, that is. Microsoft delivered its fourth consecutive beat with accelerating demand signals, 111% bookings growth, $392 billion RPO. Open AI partnership extension removes uncertainty while diversified monetization across Copilot, Azure, GitHub, and security reduces concentration risk. Sure. Near-term margin pressure is tactical. It says the strategic positioning for the AI era is unmatched, which, you know, they are investing a lot into OpenAI, and they are getting honestly slaughtered by Google right now. Analysts cutting price targets on valuation concerns create a buying opportunity given the fundamental strength. That's an interesting take as we see Microsoft get rejected from that resistance level right there. Someone's already said IBM is running. Look at IBM, you guys. That is a nice looking chart right here. IBM, EPS beat, sales beat, double beat on IBM as well. And it looks like pretty good forward guidance there in IBM. And they are absolutely ripping there on that news. Look at IBM, you guys. This is the sleeper of today. Everyone's looking at Tesla, you know, Meta, Microsoft. Of course, IBM is up there, but man, that thing's up 8%. Pretty much doing better than all of them. Someone said now NOW is down. ServiceNow Q4 EPS beat. Sales beat, double beat on now. CLS apparently reported. Not seeing anything on the news feed yet, but it definitely seems like it's reacting positively to this beat. It's up a few percent in the after hours session. Very cool. Let's pull up my multi-chart view again here. So this is Tesla. Obviously, it had a nice move up today, up 3% in the after hours session. Same here with Meta. Meta did initially have a dump, but now it's up about 3.5% as well. Now it's tanking. A lot of people keep saying CLS. Yeah, CLS did move up. Nothing crazy. I mean, yeah, again, another like 3% move up. Very nice. And Microsoft is the only thing really that I'm seeing down so far at minus 4.5%. In the meantime here, you guys, let's look up Tesla IR, see if I can figure out when their earnings call is going to start. If you guys are out there enjoying this stream and this breakdown of all the earnings being reported today, let me know by liking the video and hitting the subscribe button. Would really appreciate that. Yeah, the Tesla earnings call does not start until 1 hour and 11 minutes, it looks like. Yeah, about 2:30 Pacific Standard Time. Let's take a look at Meta when their call is going to happen. Meta is starting in like 10 minutes. And Microsoft. Not seeing when. Oh, 2:30 p.m. So the only call that's starting soon is Meta. And it's starting in about 12 minutes, you guys. I don't know, you guys. I am down the stream that calls. The Meta one starts soon in about 10 minutes. But the Tesla and Microsoft, I mean, those are not for 1 hour and 20 minutes, you guys. So probably won't stick around for that long, to be honest. But I definitely can do Microsoft. But maybe we'll see what happens on this stream. See if we stick around. Let's take a look at Meta since their earnings call does start first. Let's take a look. Do you actually have to reprompt Meta since it did not give me the proper answer yet? While that's going, let's take a look at this recent power gap scanner. But honestly, guys, Meta's looking pretty good. Has broken through this resistance here that I drew so far. And here's some recent power gaps. We got LRN. That is a wild chart. Lemonade, I guess, had a power gap. Yeah, there's a gap right there. ANET. Almost forgot about this one, but that one's looking really good. Look at that beautiful revenue growth. And this is the recent power gap scanner, by the way, you guys. You can import it from the TrendSpider store. I'll go ahead and leave a link down below for you guys to grab this power gap scanner. If you're on TrendSpider, use the link in the chat to import it if you want to. But it's a great way to figure out which stocks are gapping to the upside, especially with earnings season coming around. You're going to want to look at some power earnings gaps plays. Power earnings gap is basically right here what we have on HCA when the stock reports earnings and the next day after it has a gap up on good volume. And that's exactly what the scanner finds. It's going to happen with Meta tomorrow, most likely. It closed at 668 and now it's going to open around 696. So it'll be a pretty big power earnings gap on Meta most likely tomorrow. So a good way to track those is to use that recent power gap scanner that I put down there. CLS dump, says somebody. Says PT Griffin. Yeah, about minus 7% there on CLS. Let's take a look at Now. Now is also down. And you know what? Maybe I'll just go ahead and put on this Meta earnings report presentation. That is set to start here in just about 8 minutes. It's actually interesting. They have their whole slide deck on the call. Yeah, maybe we can hear what what Zuck has to say, the lizard. you guys are out there enjoying the stream so far, let me know by liking the video and subscribing. And also let me know if you guys want to hear the Meta earnings call that starts in 8 minutes. If you guys are out there, you want to listen in, let me know, and I can go ahead and stream it. Let's see. Let's open our stock market map today and see where the money is flowing. It's something I like to do all the time here. Oh, and here's Meta's sidekick analysis. So as you can see here, wow, very nice beat on EPS, solid beat on revenue. Forward guidance was a nice beat on revenue. Looks like the 2026 CapEx is notably larger than 2025. Rating overall on Meta, Sidekick is saying hold. Said it delivered solid Q4 beats and strong business momentum, but aggressive AI infrastructure spending in 2026 with higher CapEx. Let me double check here and make sure what we are seeing is the proper data on Meta. Yeah, double beat and sales guidance raised. So congrats to the Meta Bulls. Looking very nice. Yeah, the 8.88 was, yeah, these are the numbers, which is really good. It says, while positioning for super intelligence is strategically sound, execution uncertainty around MSL models and monetization timeline justifies caution. It says, wait for clarity on 2026 investment returns before adding exposure. These ranges in pricing are bipolar. Well, we got Meta sitting right at 700. That's a pretty key level, you guys. I put on the MenthorQ gamma levels indicator. That is the 1-day max and the 0 DTE gamma wall. The Heckler Fund, I'm going to be live again for Apple tomorrow, so make sure to tune back in tomorrow for that live stream. Can pull up the chart quickly of Apple, though. Yeah, it's in a similar spot to Meta and Microsoft, you guys. It's sitting below some resistance. So Meta was able to break through its resistance. Microsoft was not. It's hit or miss with these earnings, you guys. I don't know. And then I'll see what Tesla's at now. Tesla's bouncing nicely off the lower end of this channel, which is good to see. So yeah, the loser today, you guys, is absolutely going to be Microsoft. IBM ripped, looking very good for IBM. Now, not looking good. What else was there? I'm sure there's maybe one I missed. Waste Management reported today. No, not a massive name, but it's somewhat significant. Doesn't look like it moved a ton. But let me go and pull up Meta because their earnings call does start here pretty shortly, and it is, wow, it's flying right now, you guys. It's trying to break over 704. Let me put up all 4 charts here. Meta is right down here. Overall looking pretty good. And just 3 minutes until the earnings call. So if you guys have any questions before I go ahead and start this Meta earnings call, do let me know down in the chat. You can go over it before we listen to Zuck. Let me know what you guys are trading. Let's take a look at silver and gold into close here. Hide this. I keep saying CLS. So Celestica sees, let's see, where's the numbers? It raises the fiscal year 2026 EPS guidance quite a bit and raised the sales guidance, CLS. And they had a double beat on EPS and revenue. So they had a double beat, raised the guidance. Overall, the numbers look great on CLS. And yeah, it's pretty much flat and after hours. BABA and Oracle. Let's take a look at ORCL. Yeah, I looked at this one not too long ago. It's breaking some pretty crucial resistance here, you guys. I mean, it's still kind of in this whole consolidation range. It's honestly a dead stock in my eyes for now. I mean, it's going to bounce at some point. I wouldn't recommend trying to guess when, personally. BABA, look at this. Recently breaking out of this this downtrend line right here. Actually looking pretty good on BABA. Let's take a look at the overall China markets. Gap up today for FXI for Chinese stocks, along with EEM emerging markets is also popping off today. XLK, yeah, XLK is the tech ETF. This one just recently broke above this pivot level right there at around like 149 or so. So it's looking good for tech. Obviously, this will be affected by the earnings being reported right now. So definitely check back in on XLK tomorrow to see if it holds above this pivot level. Let me see if we got an earnings call starting. The Meta earnings call should be starting pretty soon here. Should be starting now, technically. See if we can't stream that live for you guys. Before I go, make sure you guys hit the like button and subscribe. And join us again live tomorrow. Tomorrow, we got Apple, Visa, Western Digital, and SanDisk, KLAC, Stryker. Lots of great earnings coming out tomorrow. Also in the morning have MasterCard, CAT, Lockheed Martin, the NASDAQ, NDAQ, that is Altria, MO, Blackstone. Lots and lots of earnings coming out. And Friday we have SoFi in the morning. So will be a good time. So make sure you guys subscribe and come back and chill with us tomorrow and Friday morning. Friday, we're going to go live a little bit earlier on Friday morning. So make sure to stick around and check that out. Oh, that might be the call starting here.
Good afternoon. My name is Krista, and I will be your conference operator today. At this time, I would like to welcome everyone to the Meta fourth quarter and full year 2025 earnings conference call. All lines have been placed on mute to prevent any background noise.
Whoa!
After the speaker's
Guys,
remarks,
Meta
there will
is
be an
ripping.
opportunity to ask questions. If you would like to ask a question, please press star one on your telephone keypad. To
Well,
withdraw your
enjoy the
question,
call,
again,
everybody.
press star one.
Assuming y'all can
We
hear.
ask that you limit yourself to one question.
Very
and this
nice
call will
movement
be
on Meta,
recorded.
though.
Thank you very much. Kenneth Dorrell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta Platforms' fourth quarter and full year 2025 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Lee,
Zuck.
CFO. Our remarks today will include forward-looking statements, which are based on assumptions as of today. Actual results may differ materially as a result of various factors, including those set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.atmeta.com. And now I'd like to turn the call over to Mark.
All right. Hey, everyone. Thanks for joining us. We ended 2025 strong with more than 3.5 billion people now using at least one of our apps every day. That includes more than 2 billion daily actives each on Facebook and WhatsApp, and just shy of that on Instagram. Our business also performed very well thanks to record-breaking holiday demand and AI-driven performance gains. We are now seeing a major AI acceleration. I expect 2026 to be a year where this wave accelerates even further on several fronts. We're starting to see agents really work. This will unlock the ability to build completely new products and transform how we work. In 25, we rebuilt the foundations of our AI program. Over the coming months, we're going to start shipping our new models and products. I expect our first models will be good, but more importantly, will show the rapid trajectory that we're on. And then I expect us to steadily push the frontier over the course of the year as we continue to release new models. I'm very excited about the products that we're building. Our vision is building personal superintelligence. We're starting to see the promise of AI that understands our personal context, including our history, our interests, our content, and our relationships. A lot of what makes agents valuable is the unique context that they can see. And we believe that Meta will be able to provide a uniquely personal experience. We're also working on merging LLMs with the recommendation systems that power Facebook, Instagram, Threads, and our ad system. Our world-class recommendation systems are already driving meaningful growth across our apps and ads business, but we think that the current systems are primitive compared to what will be possible soon. Today, our systems help people stay in touch with friends, understand the world, and find interesting and entertaining content. But soon, we'll be able to understand people's unique personal goals and tailor feeds to show each person content that helps them improve their lives in the ways that they want. This also has implications for commerce. Our ads today help businesses find just the right, very specific people who are interested in their products. New agentic shopping tools will allow people to find just the right, very specific set of products from the businesses in our catalog. We're focused on making these experiences work across both our feeds and across business messaging, significantly increasing the capabilities of WhatsApp over time. New kinds of content will soon be possible as well. People want to express themselves and experience the world in the most immersive and interactive ways possible. We started with text and then moved to photos when we got phones with cameras, and then moved to video when mobile networks got fast enough. Soon, we'll see an explosion of new media formats that are more immersive and interactive and only possible because of advances in AI. Our feeds will become more interactive overall. Today, our apps feel like algorithms that recommend content. Soon, you'll open our apps and you'll have an AI that understands you and also happens to be able to show you great content or even generate great personalized content for you. Glasses are the ultimate incarnation of this vision. They're going to be able to see what you see, hear what you hear, talk to you and help you as you go about your day, and even show you information or generate custom UI right there in your vision. Sales of our glasses more than tripled last year, and we think that they're some of the fastest growing consumer electronics in history. Billions of people wear glasses or contacts for vision correction, and I think that we're at a moment similar to when smartphones arrived, and it was clearly only a matter of time until all those flip phones became smartphones. It's hard to imagine a world in several years where most glasses that people wear aren't AI glasses. For Reality Labs, we're directing most of our investment towards glasses and wearables going forward, while focusing on making Horizon a massive success on mobile and making VR a profitable ecosystem over the coming years. I expect Reality Labs losses this year to be similar to last year, and this will likely be the peak as we start to gradually reduce our losses going forward while continuing to execute on our vision. As we plan for the future, We will continue to invest very significantly in infrastructure to train leading models and deliver personal superintelligence to billions of people and businesses around the world. I recently announced MetaCompute with the belief that being the most efficient at how we engineer, invest, and partner to build our infrastructure will become a strategic advantage. Dina Powell McCormick also joined us as president and vice chairman, and she will lead our efforts to partner with governments, sovereigns, and strategic capital partners to expand our long-term capacity, including ensuring positive economic impact in the communities that we operate in around the world. An important part of MetaCompute will be making long-term investments in silicon and energy. We will continue working with key partners while advancing our own silicon program. We're architecting our systems that we can be flexible in the systems that we use, and we expect the cost per gigawatt to decrease significantly over time through optimizing both our technology and supply chain. The last thing that I want to mention is that I think that 2026 is going to be the year that AI starts to dramatically change the way that we work. As we navigate this, our North Star is building the best place for individuals to make a massive impact. So to do this, we're investing in AI native tooling so individuals at Meta can get more done. We're elevating individual contributors and flattening teams. We're starting to see projects that used to require big teams now be accomplished by a single very talented person. I want to make sure that as many of these very talented people as possible choose Meta as the place that they can make the greatest impact, to deliver personalized products to billions of people around the world. And if we do this, then I think that we're going to get a lot more done, and I think it's going to be a lot more fun. All right, that's everything I wanted to cover. This is going to be a big year for delivering personal superintelligence, accelerating our business, building infrastructure for the future, and shaping how our company will work going forward. As always, I am grateful for all of the hard work of our teams and to all of you for being on this journey with us. And now here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our segment results. All comparisons are on a year-over-year basis unless otherwise noted. Our community across the family of apps continues to grow, and we estimate more than 3.5 billion people used at least one of our family of apps on a daily basis in December. Q4 total family of apps revenue was $58.9 billion, up 25% year over year. Q4 family of apps ad revenue was $58.1 billion, up 24%, or 23% on a constant currency basis. In Q4, the total number of ad impressions served across our services increased 18%. Impression growth was healthy across all regions, driven primarily by engagement and user growth, and to a lesser degree, ad load optimizations. The average price per ad increased 6% year over year, benefiting from increased advertiser demand, largely driven by improved ad performance. Family of apps other revenue was $801 million, up 54%, driven by WhatsApp paid messaging revenue growth, as well as Meta verified subscriptions. Within our Reality Labs segment, Q4 revenue was $955 million, down 12% year over year. As we noted on the last call, the year-over-year decline in Reality Labs revenue is due to us lapping the introduction of Quest 3S in Q4 of 2024, as well as retail partners procuring Quest headsets during the third quarter of 2025 to prepare for the holiday season, which was recorded as revenue in Q3. Moving now to our consolidated results. Q4 total revenue was $59.9 billion, up 24%, or 23% on a constant currency basis. Q4 total expenses were $35.1 billion, up 40% compared to last year. Year-over-year growth was driven primarily by employee compensation expenses, legal expenses, and infrastructure costs. Growth in employee compensation expenses reflects the technical hires we've added this year, particularly AI talent. Legal expense growth was due to both lapping legal accrual reversals in Q4 of 24 and charges recorded in Q4 25. Infrastructure expense growth was driven by higher depreciation, cloud spend, and other operating expenses. We ended Q4 with over 78,800 employees, up 6% year over year, driven by hiring in priority areas of monetization, infrastructure, Meta Superintelligence Labs, as well as regulation and compliance. Fourth quarter operating income was $24.7 billion, representing a 41% operating margin. Q4 interest and other income was $609 million, driven primarily by unrealized gains on our equity investments. Our tax rate for the quarter was 10%, slightly lower than our outlook of 12 to 15% due to the settlement of matters with tax authorities. Net income was $22.8 billion, or $8.88 per share. Capital expenditures, including principal payments on finance leases, were $22.1 billion, driven by investments in data centers, servers, and network infrastructure. Free cash flow was $14.1 billion. We ended the quarter with $81.6 billion in cash and marketable securities and $58.7 billion in debt. Turning now to the business performance. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we're continuing to drive incremental engagement from ranking and product improvements. Instagram Reels had another strong quarter, with watch time up more than 30% year over year in the US. Engagement is benefiting from several optimizations we made to improve the quality of recommendations, including simplifying our ranking architecture to enable more efficient model scaling. This unlocked the ability for our systems to consider longer interaction histories to better identify a person's interests. On Facebook, video time continued to grow double digits year over year in the US, and we're seeing strong results from our ranking and product efforts on both feed and video surfaces. The optimizations we made in Q4 drove a 7% lift in views of organic feed and video posts on Facebook, resulting in the largest quarterly revenue impact from Facebook product launches in the past 2 years. We're continuing to increase the freshness and originality of content recommendations as well. On Facebook, our systems are surfacing over 25% more Reels published that day than the prior quarter. On Instagram, we grew the prevalence of original content in the US by 10 percentage points in Q4, with 75% of recommendations now coming from original posts. Threads is also seeing strong momentum, again benefiting from recommendation improvements. The optimizations we made in Q4 drove a 20% lift in Threads time spent. Turning to 2026, we see a lot of opportunity to drive additional gains. This includes scaling the complexity and amount of training data we use in our models while continuing to make our systems more responsive to people's real-time interests. We're also focused on incorporating LLMs to understand content more deeply across our platform, which will enable more personalized recommendations. Another big area of investment this year is developing the next generation of our recommendation systems. We have several big bets on this front, including building new model architectures from the ground up that will work on top of LLMs, leveraging the world knowledge and reasoning capabilities of an LLM to better infer people's interests. Beyond improvements to our recommendation systems, we expect to use the models developed by Meta Superintelligence Labs to deliver compelling and differentiated AI products. One area we're already seeing promise is with AI dubbing of videos into local languages. We are now supporting 9 different languages with hundreds of millions of people watching AI-translated videos every day. This is already driving incremental time spent on Instagram, and we plan to launch support for more languages over the course of this year. We are also seeing strong traction with our media creation tools. Nearly 10% of the Reels people view each day are now created in our Edits app, almost tripling from last quarter. Within Meta AI, the number of daily actives generating media tripled year over year in Q4. This year, we expect to advance the capabilities of our underlying media generation models and ship new features to further enhance the product experience. Another area we're focused on for Meta AI is personalization. We're seeing in our early testing that personalized responses drive higher levels of engagement, and we expect to significantly advance the personalization of Meta AI this year. This dovetails with our investments in content understanding, which will enable our systems to develop a deeper understanding of each person's interests and preferences while also identifying the most relevant content across our platform to pull into responses. Turning to the second driver of our revenue performance, increasing monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. Here, our focus remains on tuning our systems to identify the right time and place to deliver ads. In some cases, this enables us to grow the overall level of ad load while preserving the user experience. However, an increasingly important part of this work is finding opportunities to drive incremental conversions within the same overall level of ad load by determining when a person is more interested in seeing an ad. In fact, in the second half of 2025, our initiatives on Facebook to redistribute ads across users and sessions delivered a nearly 4 times larger revenue impact than Facebook ad load increases. We also continue to make progress on bringing ads to our newer surfaces. Within Threads, we're beginning to expand ads to all remaining countries this month, including the UK, European Union, and Brazil. On WhatsApp, we expect to complete the rollout of ads and status throughout the year, with the level of ads remaining low in the near term, while we follow our standard approach of optimizing ad formats and performance before ramping inventory. Moving to the second part of increasing monetization efficiency, improving performance for the businesses who use our tools. We're seeing very strong results from the ad performance investments we made throughout 2025, with year-over-year conversion growth accelerating through the fourth quarter. We expect the set of investments we're making in 2026 will enable us to drive further gains as we continue to integrate AI across all layers of the marketing and customer engagement funnel. The first area is our ad system, where we're continuing to scale the complexity and size of our models to better select which ads to show. In Q4, we doubled the number of GPUs we use to train our GEM model for ads ranking. We also adopted a new sequence learning model architecture, which is capable of using longer sequences of user behavior and processing much richer information about each piece of content. The GEM and sequence learning improvements together drove a 3.5% lift in ad clicks on Facebook and a more than 1% gain in conversions on Instagram in Q4. This new sequence learning architecture is significantly more efficient than our prior architectures, which should enable us to further scale up the data, complexity, and compute we use in our future ranking models to deliver performance gains. As we scale up our foundational ads models like GEM, we are also developing more advanced models to use downstream of them at runtime for ads inference. In Q4, we launched a new runtime model across Instagram feed, stories, and reels, resulting in a 3% increase in conversion rates in Q4. We continue to progress on our model unification efforts under Lattice as well. After seeing strong success with the consolidation of Facebook feed and video models in the first half of 2025, in Q4, we consolidated models for Facebook stories and other surfaces into the overall Facebook model. This, along with a series of backend improvements, drove a 12% increase in ads quality. And in 2026, we expect to consolidate more models than we had in the prior 2 years, as we continue to evolve our systems towards running a smaller number of highly capable models. Moving to the next area, ads products. We continue investing in ways to help businesses leverage AI to reduce the friction of setting up and optimizing an ad campaign. In Q4, we started testing our Meta AI business assistant with advertisers, which helps with tasks like campaign optimization and account support. In the coming months, we'll make it available to more advertisers so each business has an AI assistant they can chat with that remembers their business's goals and provides personalized recommendations on how to improve performance. Another area we're deploying AI to improve performance is ad creative. The combined revenue run rate of video generation tools hit $10 billion in Q4, with quarter-over-quarter growth outpacing the increase in overall ads revenue by nearly 3 times. We are also seeing very good results from our incremental attribution feature, which optimizes for incremental conversions in real time. Our latest model rollout in Q4 is driving a 24% increase in incremental conversions versus our standard attribution model, and this product has already achieved a multi-billion-dollar annual run rate just 7 months since launching. The last area of our monetization work I'll cover is business messaging, where we're seeing strong momentum across our portfolio of solutions. Click-to-message ads revenue growth accelerated in Q4, with the US up more than 50% year over year, driven by strong adoption of our website-to-message ads, which direct people to a business's website for more information before choosing to launch a chat. Paid messaging within WhatsApp continues to scale as well, crossing a $2 billion annual run rate in Q4. Finally, we're seeing good early traction with our business AIs in Mexico and the Philippines, with over 1 million weekly conversations between people and business AIs now happening on our messaging platforms. This year, we will expand availability of our business AIs to more markets, while also extending their capabilities so they not only answer questions on topics like product availability, but can help people get things done right within WhatsApp. We speak a lot about how AI is improving our products, but I'd like to take a moment to give an update on how it's changing the way we work. Mark mentioned our focus on making Meta a place where individuals can have significant impact. A big focus of this is to enable the adoption and advancement of our AI coding tools, where we're seeing strong momentum. Since the beginning of 2025, we've seen a 30% increase in output per engineer, with the majority of that growth coming from the adoption of agentic coding, which saw a big jump in Q4. We're seeing even stronger gains with power users of AI coding tools, whose output has increased 80% year over year. We expect this growth to accelerate through the next half. Next, I would like to discuss our approach to capital allocation. We have significant opportunities to improve our core business in 2026. We plan to continue to prioritize investing in the business to support these opportunities, while also positioning us for an entirely new and exciting product cycle over the coming years, powered by our AI models. Procuring sufficient infrastructure capacity is central to these initiatives, and we're working to meet our silicon needs by deploying a variety of chips that optimally support each of our different workloads. To that end, in Q4, we extended our Andromeda ads retrieval engine so it can now run on NVIDIA, AMD, and MTIA. This, along with model innovations, enabled us to nearly triple Andromeda's compute efficiency. In Q1, we will extend our MTIA program to support our core ranking and recommendation training workloads, in addition to the inference workloads it currently runs. More broadly, as we invest in infrastructure to meet our business needs, we continue to prioritize maintaining long-term flexibility so we can adapt to how the market develops. We're doing so in several ways, including changing how we develop data center sites, establishing strategic partnerships, contracting cloud capacity, and establishing new ownership structures for some of our large data center sites. We have a strong net cash balance and expect our business will continue to generate sufficient cash to fund our infrastructure investments in 2026, which is reflected in our expectations. Nonetheless, we will continue to look for opportunities to periodically supplement our strong operating cash flow with prudent amounts of cost-efficient external financing, which may lead us to eventually maintain a positive net debt balance. Moving to our financial outlook, we expect our first quarter 2026 total revenue to be in the range of $53.5 to $56.5 billion. Our guidance assumes foreign currency is an approximately 4% tailwind to year-over-year total revenue growth based on current exchange rates. Turning to the expense and CapEx outlooks, we expect full year 2026 total expenses to be in the range of $162 to $169 billion. The majority of expense growth will be driven by infrastructure costs, which includes third-party cloud spend, higher depreciation, and higher infrastructure operating expenses. The second largest contributor to total expense growth is employee compensation driven by investments in technical talent. This includes 2026 hires to support our priority areas, particularly AI, as well as a full year of expenses from 2025 hires. At a segment level, we expect expense growth to be driven by the family of apps, with Reality Labs operating losses remaining similar to 2025 levels. We anticipate 2026 capital expenditures, including principal payments on finance leases, to be in the range of $115 to $135 billion, with year-over-year growth driven by increased investment to support our Meta Superintelligence Labs efforts and core business. Despite the meaningful step up in infrastructure investment, in 2026, we expect to deliver operating income that is above 2025 operating income. Absent any changes to our tax landscape, we expect our full year 2026 tax rate to be 13 to 16%. Finally, we recently aligned with the European Commission on further changes to our less personalized ads offering, which we will begin rolling out this quarter. However, we continue to monitor legal and regulatory headwinds in the EU and the US that could significantly impact our business and financial results. For example, we continue to see scrutiny on youth-related issues and have a number of trials scheduled for this year in the US, which may ultimately result in a material loss. In closing, 2025 was another strong year for our company. The investments we've made to improve our business are continuing to drive strong growth, and we have an exciting roadmap this year to deliver new experiences and services for our global community. As always, thank you to our teams for their hard work and commitment to our mission. With that, Krista, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star 1 on your touch-tone phone. To withdraw your question, again, press star 1. Please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Brian Nowak with Morgan Stanley. Please go ahead.
Thanks for taking my questions. I have one for Mark, one for Susan. Mark, one is a long-term question. As you think about ramping all this investment and the personal intelligence opportunity, the meta compute opportunity, can you walk us through a little bit how you think about the largest revenue or ROIC long-term opportunities you're trying to unlock with those over the next, call it 3, 5, 10 years through all the investment? And then Susan, a little more near term, more like 26. I think the guide is the fastest growth you've had in almost 5 years. I know you have a lot of improvements on recommendations and monetization efficiency, but can you just sort of help us a little bit understand 2 or 3 of the biggest drivers of this inflection you're seeing on revenue in 26? Yeah, I guess I can start with the first one. Although I have to say up front that I think my answers to a lot of your questions on this particular call may be somewhat unfulfilling, because we're in this interesting period where we've been rebuilding our AI effort, and we're 6 months into that, and I'm happy with how it's going. But we are going to be rolling out our initial set of models and products and businesses around that over the coming months, and I will have a lot more to share on all of those fronts at that point. So I'm happy to offer kind of a high-level view of some of the stuff, but I apologize in advance that not much of this is going to be particularly detailed, but it will be exciting as we roll it out. I think the theme on the business, I mean, this is I don't think I'm going to break any new ground here, but there are several major business opportunities that we're focused on. I think that one is just going to be improving the core products and accelerating the current business. I talked about that in terms of the connecting of the recommendation systems and the LLMs, which I think will both improve the quality of the organic experience and of advertising. We're going to see the generation of media improve the quality of content, which, coupled with the improvements in the recommendation systems, we expect to generally accelerate the quality and effectiveness of the core business, both for people who use it organically and for businesses. So I think that will have a compounding effect. And then there's going to be many, I think, new business opportunities that come up. I mean, we have been working on Meta AI for a while. I think you're starting to see some of the way that products like that get monetized across the industry. When we get that to a scale and depth that we want, we think that there are going to be opportunities both in terms of subscriptions and advertising and all of the different things that you see on that. I mean, yeah, I think there's a number of things on shopping and commerce that I'm quite excited about that I alluded to in the comments up front. And as the models launch and we demonstrate some of the capabilities, both in the first set of models and over the year, I think the models are going to get a lot better too. We'll be able to have different products paired with those that I think will facilitate different businesses for businesses who use us and our platforms, as well as direct consumer businesses. I guess it's probably also worth flagging, because I don't think either of us mentioned the Manus acquisition in the upfront comments. I think that is going to is a good example of you have a significant number of businesses that already pay a subscription to basically use their tool to accelerate their business results, and integrating that kind of thing into our ads and business manager, so that way we can just offer more integrated solutions for the many millions of businesses that use and rely on our platforms, is going to be really powerful, both for accelerating their results using the existing products that we have, and I think adding new lines as well. So a somewhat high level answer, and I think the picture will become clearer, and I think more exciting if we do our jobs well over the course of the year.
Brian, on your second question, there's obviously a range of outcomes captured in the Q1 26 revenue outlook. It overall reflects our expectation for a strong quarter of growth. The range embeds an outlook for accelerated growth, and that's really underpinned by the strong demand that we saw through the end of Q4 and continuing into the start of 2026. Now, I will say we also expect foreign currency to be a 4-point benefit to year-over-year growth. So that is a 3-point larger tailwind than it was in Q4 25, as we lap the strengthening of the US dollar a year ago. But overall, we see that advertisers are responding to ad performance improvements that we made. They're driving strong conversion growth. We've made a lot of these investments over the course of 2025, including advances to our ads ranking and delivery systems, the more effective redistribution of ad load, new features and ad products like Advantage Plus, better measurement, and just a lot of great work that has helped to drive the continued performance of our ads.
Your next question comes from the line of Eric Sheridan with Goldman Sachs. Please go ahead.
Thanks so much for taking the question. Maybe two, if I could. In prior periods, you've talked about being capacity constrained internally and not having enough compute to sort of achieve the goals you have on a platform and a product standpoint. I want to know if we get any update on currently how you think about your own internal needs for compute against that roadmap. And the second part of the question would be, as we continue to see the ads business sort of scale, especially in terms of dollar growth year on year, have we yet seen the full first order effects of scaling the business against applying more compute to it? Or how should investors think about the directional relationship between applying more compute and rate of change in terms of outcomes on the monetization side? Thank you.
On your first question, we do continue to be capacity constrained. Our teams have done a great job ramping up our infrastructure through the course of 2025, but demands for compute resources across the company have increased even faster than our supply. So we expect over the course of 2026 to have significantly more capacity this year as we add cloud. But we'll likely still be constrained through much of 2026 until additional capacity from our own facilities comes online later in the year. With that said, I think, we have done a good job internally mitigating the impact of compute constraints on our business. I expect that will continue to be the case in 2026. We're continuing to focus on increasing our infrastructure efficiency in several ways, including by optimizing workloads, improving infrastructure utilization, diversifying our chip supply, and just investing in efficiency improvements as part of our core technology development efforts in areas like content and ads ranking. So that was your first question. The second question about how the ads business scales. I think I don't have an extremely precise answer to this question. What I'd say is, one of the ways that we are working to drive ads performance improvements is by improving our larger scale models, along with our lighter weight ones that we use for ads inference at runtime. we don't typically use our larger model architectures like GEM for inference because their size and complexity would make it too cost prohibitive. So the way that we drive performance from those models is by using them to transfer knowledge to smaller, lightweight models used at runtime. But I would say that we think that there is room for our larger models to benefit from having more compute. And I think as we scale up the compute available to those models and the foundational models in different areas that power the different stages of ads, ranking, and recommendation, we expect that we will see gains coming from that.
Your next question comes from the line of Mark Shmulik with Bernstein. Please go ahead.
Yes, thanks for taking the questions too, if I may. Mark, kind of with your comments that you kind of expect to see some meaningful changes in how work and things are done this year, I guess, would you be surprised if kind of by the end of the year, we've yet to see meaningful progress and adoption on some of the newer products and initiatives that you're launching? Or, should we just be a bit more patient on the timeline here? And then Susan, kind of with the guidance provided on OI still expected to grow kind of faster this year than last year, let's say in a few months we realize we need more investment and resources to continue to go after the AI opportunity, but perhaps macro might be a bit weaker. How hard of a line is there in terms of the tie of investment levels to core performance? Thank you.
I think the first question was asking about kind of when do I expect the product impact to be? I mean, we're going to roll out new products over the course of the year. I think the important thing is we're not just launching one thing, and we're building a lot of things. I think AI is going to enable a lot of new experiences. I outlined thematically a bunch of these in the upfront comments around, a personal AI, around LLMs combining with the recommendation systems. I think that's a somewhat longer term research project that I think will yield dividends over a long period of time, but we're already definitely seeing optimizations of the recommendation systems as we're including more of the AI research improvements and advances into that. The content is going to improve. There are going to be new formats. There are going to be improvements on the glasses. There are all these different things, as well as several things that we think are new that we're going to try that are not just extensions of the current things that we're doing. So, yeah, I mean, I would expect that we'll roll these out over the course of the year, and that sometimes it takes a few iterations for things to really hit and reach the kind of product market fit that you need. But I think we have enough time, hopefully, to we're starting off early enough in the year that I would expect that we'll see some successes by the end of the year on this, as well as on the work side. What we were talking about is I think it's very hard for anyone exactly to predict what the shape of how organizations working is going to feel, but I just think the fact that agents are really starting to work now is quite profound, and I think is going to allow. We're already starting to see the people who adopt them are just being significantly more productive, and there's a big delta between the people who do it and do it well, and the people who don't, and I think that's going to just be a very profound dynamic for I think across the whole sector and probably the whole economy going forward in terms of the productivity and efficiency with which we can run these companies, which I think, my hope is that we can use that to just get a lot more done than we were able to before. And I'm most focused on making sure that Meta is a great company to have a big impact, right? You'll be able to use these kind of agentic tools anywhere, but you will only be able to come and ship things to billions of people if you join a company like Meta, and there aren't that many companies like Meta. So, I think if we make it so that so that we can harness these kind of tools, then I think that we should, over some period of time, start to see a real acceleration in the amount of output that we could have. Now, how to predict exactly the time frame for adopting that, somewhat hard, right? I'm not going to predict a specific quarter or something like that, but the trend seems like unmistakably like this is going to happen. And that, to me, is something that is very exciting. And like I said in my comments up front, also, like, honestly, kind of fun, right? I think it just makes it more fun to be able to build a lot of things. And that's what we're here to do.
Mark, on your second question, I want to make sure and clarify something. So I think in the question, you had said that operating income growth in 26 would be higher than 25. And I want to make sure my comments were super clear. In 2026, we expect to deliver operating income above 2025 operating income. So this is comparing absolute dollars, not year-over-year growth. So to give some context on that, we are going into 2026 with strong revenue growth at the start. Of course, we are just a few weeks in, set against, a healthy macro backdrop. So obviously hard to extrapolate the current trends to the full year. And, there are many, many moving variables in the current landscape. We're really taking advantage of the current business strength to reinvest a lot of the revenue into what we see as very attractive investment opportunities in AI infrastructure and talent. It's hard to assess, what all of those investment opportunities will be over the course of the year as we continue to work through our capacity options. And of course, it remains a very competitive hiring market, but we'd like to invest aggressively where we can. We continue to use our framework that we shared at this point several years ago of growing consolidated operating profit over time to guide those investments. And based on where our plans are rolling up today, again, in 26, we expect to deliver more operating income than we did in 2025.
Your next question comes from the line of Doug Anmuth with JP Morgan. Please go ahead.
Thanks so much for taking the questions. One for Mark and one for Susan. Mark, could you just provide more detail on the progress of the MSL team several months in and more on your view on the path to a frontier model this year? And then Susan, I know you expect to grow operating income in 26. Do you also expect to have positive free cash flow? Just how should we think about the current and any future JVs for data center and compute build out? Thanks.
I'm not sure I have anything else to add on the current progress on this. I mean, that's why I've said up front that I think this is somewhat of an unfulfilling time to be answering some of these questions. We're about 6 months into building MSL. I'm very pleased with the quality of the team. I think we have the most talent-dense research effort in the industry, and some of the early indicators look positive. But look, I think that this is a long-term effort, right? We're not here to do this to ship like one model or one product. We're doing a lot of models over time and a lot of different products. And I want to make sure that the work can speak for itself, and also that we all internalize that this is a journey that we're on, and the first set of things that we put out, I think, are going to be more about showing the trajectory that we're on, rather than being a single moment in time. So yeah, I'm quite optimistic, but don't have anything else particularly concrete to share.
Doug, on the first part of your question, we are making very significant investments in infrastructure capacity this year to support our AI efforts. And we believe we're in a strong position to support them with the cash generation of our business this year. And at the same time, we'll continue to explore different paths as we build out our infrastructure capacity that help us provide us the long-term flexibility and option value that we look for as we support our future capacity needs against the backdrop of a very wide range of possible capacity demand over the years to come. So we don't have anything additional to announce at this point. We are looking at all of the different opportunities to stand up capacity across kind of the different timeframes that we need them.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Great. A couple, maybe one for Mark and one for Susan. It just seems like you're going to have a tremendous amount of capacity. How do you think about expanding your opportunities beyond ads, things like subscriptions or licensing cloud models, just with all the interesting things you're building? I don't expect any product announcements, but can you do things beyond ads? And then for Susan, it's really interesting to see the acceleration, even ex-FX and advertising. I'm just wondering if you're seeing a general acceleration in e-commerce activity. Where do you think the dollars are coming from, and is the entire internet ecosystem accelerating? And just wondering your thoughts on that.
So yes, we are focused on things beyond ads. I think the numbers make it so that for the next couple of years, ads are going to be by far the most important driver of growth in our business. So that's why as we're working on this, we have a balance of new things that we're trying to do while also investing very heavily in making sure that all of the work that we're doing in AI improves both the quality and business performance of the core apps and businesses that we run there. But yeah, I mean, we'll have more to share on that. But I mean, all these things, even if they scale very quickly, are going to take some time to be meaningful at the scale of what the ads business is. And while we're doing that, we're just very focused on also delivering more value to businesses and more quality in the apps that we run ads in.
Justin, on your second question, we saw healthy year-over-year growth across all verticals in Q4, with the exception of politics as we lapped the U.S. presidential election last year. The online commerce vertical was the largest contributor to year-over-year growth. That was followed by professional services and technology. So in online commerce, year-over-year growth was strong. It was actually relatively consistent with Q3 levels, and that was broad-based across advertiser regions and sizes. In general, we saw that the demand leading up to the holiday shopping period that sustained through Cyber 5 and into the end of the year, was very healthy for us. Professional services, in this category, we saw strong broad-based growth with nice contributions from lead generation ads due to product improvements we've made, including from Advantage Plus lead campaigns that we fully rolled out at the start of Q4. And the tech vertical continues to be strong for us too, again, broad-based across advertiser regions and sizes. So in general, I would say it was very healthy, broadly driven growth.
Your next question comes from the line of Ross Sandler with Barclays. Please go ahead.
Yeah, Mark, you mentioned bringing Horizon World into mobile. We haven't heard much from the Horizon World squad on these calls, so interesting that that's making it in. It seems like the combo of AI and what you guys have built with Horizon might open up the door to a bunch of new potential areas in gaming or new forms of kind of communication. So could you just elaborate on what the plan is there? Thank you.
Yeah, so let me talk about the basic theme here. One core idea that I've talked about on some of these calls over the years is that people always want to express themselves and experience the world in whatever the richest format is that they can. So I talked about this up front today. When we started, a lot of this was text, right? That was the kind of the best we could do. Then we all got phones, they had cameras, like a lot of this medium became visual, but with photos. We went through a period where the mobile networks were kind of weak, and every time you wanted to watch a video, it would buffer. And once that got worked out, now the majority of the content is video. And one of the core ideas that we have had for a while is that that is not the end of the line, right? Video will continue to be here for a long time. It's going to continue growing. It's not going anywhere, just like photos and text in many ways continue to grow, even as the market continues to grow beyond that. But I don't think that video is the ultimate kind of final format. I think that we're going to get more formats that are more interactive and immersive, and you're going to get them in your feeds. So you can imagine this. I mean, there's obviously a lot of details to fill in on this, but you can imagine, being able to easily through a prompt create a world or create a game and be able to share that with people who they care about, and you see it in your feed and you can jump right into it and you can engage in it. And there are 3D versions of that and there are 2D versions of that. And Horizon, I think, fits very well with the kind of immersive 3D version of that. But there's definitely a version of the future where, any video that you see, you can tap on and jump into it and engage and be kind of experience it in a more meaningful way. And I think that the investments that we've done in both a lot of the virtual reality software and Horizon, as well as a number of other areas around the company, are actually going to pair well with these AI advances to be able to bring some of those experiences to hundreds of millions and billions of people through mobile. So anyway, that's a thing that I'm quite excited about, but it's just sort of one flavor of a theme that I think is going to be very interesting. I think that there are going to be lots of different types of interactive and immersive content that become possible. And I think Horizon is going to be one very interesting example that I'm quite excited to see how this unfolds.
Your next question comes from the line of Ron Josey with Citi. Please go ahead.
Great, thanks for taking the question. I wanted to drill down maybe, Susan, on your comments around ranking recommendation model changes. Clearly lots of tailwinds here, given the results from GEMS, Andromeda, Lattice, consolidation of models, et cetera. So can you help us understand a little bit more just about the roadmap and where we stand within ranking recommendation model changes? There's a thesis out there that maybe there's a limiting factor, maybe we're waiting on newer models, but any insights there would be very helpful as we think about the next, as the future going forward. Thank you.
Yeah, thanks for the question, Ron. We have, I was sorting out if your question was more specific to ads or if it was more specific to kind of the engagement side, but I'll try to talk a little bit about both. So on the sort of core engagement piece, we launched several ranking improvements in Q4 on Facebook and Instagram that drove incremental engagement. And there isn't really one single launch, that is driving most of the gains. It's, multiple optimizations to our recommendation systems that are helping us make more accurate predictions about what will be interesting to each person. And, I talked a little bit about some of these, the specific instantiations on both Facebook and on Instagram. And we see, a lot of headroom to improve recommendations in 2026, which we expect will drive additional engagement growth on both apps. First, we plan to continue scaling up our models and increase the amount of data we use, including a longer history of content interactions to further improve the overall quality of recommendations. We're also going to start validating the use of ad signals and organic content recommendations as we continue to work towards having a more shared platform for organic and ads recommendations over time. Second, we're going to continue to make recommendations even more adaptive to what a person is engaging with during their session. So the recommendations we surface are more relevant to what they're interested in at that moment. And finally, we will work on more deeply incorporating LLMs into our existing recommendation systems, given their capability to more deeply understand content. And so this will, I think, in particular, be useful for content that has been more recently posted, since there's less engagement data to base recommendations off of. On the ad side, again, we've talked about a lot of the sort of model work in the ads world across Andromeda and Lattice and GEM. I'll touch maybe specifically, on GEM in Q4, we extended GEM to cover Facebook Reels. Now it covers all major surfaces across Facebook and Instagram. We also doubled the size of the GPU cluster we use to train it. And in 2026, we're expecting to meaningfully scale up GEM training to an even larger cluster, increasing the complexity of the model, expanding the data that we train it on, leveraging new sequence learning architecture that we had begun deploying in Q4. And we're also going to further improve how we transfer the learnings from our GEM foundation models to the runtime models that we're using. So, there's a lot more headroom, I think, across many components of the stack. This is the first time we have found a recommendation model architecture that can scale with similar efficiency as LLMs. And, we're hoping that this will unlock the ability for us to significantly scale up the size of our ranking models, while preserving an attractive ROI.
Your next question will come from the line of Ken Gawrelski with Wells Fargo. Please go ahead.
Thank you very much. Two, if I may, please. First, for Mark, how critical is it for Meta to have a leading general purpose model, or is there sufficient capability in a model that really excels at specific use cases, maybe similar to what you see at Anthropic in coding today? We'd love to, if you could opine on that. And then second, maybe I just want to push again, maybe on this last question, Susan, on the visibility you have. You talked about the improvements you're making in 26 on the models. it's fine tuning of the core, both in engagement and ad relevance. Could you talk about, are you seeing any signs of diminishing returns to those investments? And do you have visibility beyond 26 into further opportunities there? Thank you.
I think the question was around how important is it for us to have a general model. The way that I think about Meta is we're a deep technology company. Some people think about us as we build these apps and experiences, but the thing that allows us to build all these things is that we build and control the underlying technology that allows us to integrate and design the experiences that we want and not just be constrained to what others in the ecosystem are building or allow us to build. So I think that this is a really fundamental thing where my guess is that frontier AI, for many reasons, some competitive, some safety oriented, are not going to always be available through an API to everyone. So I think it's very important, I think, to be able to have the capability to build the experiences that you want if you want to be one of the major companies in the world that helps to shape the future of these products. So that I think it's going to be, I think, important from a business perspective. And I think it's just important from a creative and mission perspective to be able to actually design and build the experiences that we believe that we should be building for people. But yeah, I think it's quite important. Otherwise, we wouldn't be so focused on this. We're clearly extremely focused on this.
On your second question, interestingly, a year ago on this call, I think I talked about the set of investments we were making in 2025 as part of our 2025 budgeting process across our ads performance and organic engagement initiatives. And those investments have generally paid off, and we feel really good about kind of the process we ran in terms of using projected ROI to stack rank investments, make sure that we, had a robust measurement system, funded things that were positive ROI, and then tracking how they performed over the course of the year. And we are, we've just finished running our 2026 budgeting process, and we have funded a similar set of investments, which we expect will enable us to continue delivering strong revenue growth in 2026. Having said that, I expect both full year reported and constant currency revenue growth to be below the levels in Q1 for a few reasons. First, we would expect that currency tailwinds will dissipate later in the year based on current rates. Second, we'll be lapping stronger periods of growth later in the year that benefited from our 2025 ad performance investments and the strong macro landscape. And finally, we expect there could be some headwinds from our introduction of the revised, less personalized ads offering in the EU that begins rolling out later in Q1. But again, similar to 25, we feel good about the process by which we identified investment opportunities with attractive ROIs and funded them as part of our budget to support, key initiatives across our ranking and recommendation systems and to increase the capacity efficiency of our models, all of which are key to sort of driving growth for us.
Your next question comes from the line of Mark Mahaney with Evercore. Please go ahead.
Okay, 2 questions, please. Meta AI, any update on what you're seeing there in terms of engagement and usage? And do you think you're just starting to be able to apply improvements to that specific functionality? And then just real quickly on share repurchases, Susan, I don't think you bought any stock back in the quarter. It's been a while, maybe a year since you haven't bought anything back. You talked about capital allocation a little bit into the year. It didn't sound like you're going to be buying back stock anytime soon, but just you want to clarify that? Thanks a lot.
Yes, I'm happy to take both of those. So Meta AI, the quick update there is, it's now available in over 200 markets. The largest daily active user markets for Meta AI align with where our apps are also very popular. though the apps people engage most with Meta AI differ. In some places, it's primarily WhatsApp driven, for example, India or Indonesia. In the US, Facebook is a stronger driver of engagement. And in general, we see a lot of opportunity to make it easier for people to accomplish the tasks that they already come to our services for every day. And if we do that well, then the way people use our products will continue to expand. So we're focused on making Meta AI the most personalized assistant while tapping into the vast amount of information, trends, content from our platform to offer differentiated insights. And we think we have a very strong track record in building highly personalized experiences, and we're bringing that into Meta AI so that we can tailor responses to each person's personal interests and preferences. On your second question, which is about share repurchase, share repurchase levels will vary from time to time for a lot of reasons, including whether we believe there are areas that have a greater near-term need for capital. Right now, we think the highest order priority for the company is investing our resources to position ourselves as a leader in AI. And so that is really that's kind of the first order use of capital, but we'll continue to be opportunistic and evaluate repurchases versus other uses of cash.
Great. I think we will wrap it here. Thank you, everyone.